Okay. Big movers this morning. Mm-hmm. Did it go? The last little pump right there? Oh yeah. It's there. Good morning. How'd we do, everybody? Did you believe in the S-curve? You should have. The S-curve believed in you. Constantine. I think I accidentally changed it. I don't think I ever put it back. So I had the GAN box, and it was set up for Monday. And then last week, we talked about the possibility it was extended to about midday today. It wasn't even really that big of a difference. It was like 4 hour difference. So it may even be that looks more like Tuesday on a smaller chart. But I had no, still just like an extra few hours today. I had traded it. I told you guys I was trading it. I traded from bottom here to top here. Then I exited the trade, and then I bought in again. Told you guys I was buying in again. I bought in really early, like right around 565, and it kind of stayed there all day. And those calls were up incredibly high this morning. One was 419, the other was 290 percentage. It was a lot. So bought them for like under $2 or $2 or something, and sold them for like $9 and $10. Why? Because to me, these were normal backups. This is a normal backup. Everything about this looked pretty much the same as this, just smaller, which you would expect to see on an S curve, that it would shrink. We'll definitely have to talk a lot about AMC today, and I want to clarify some things too, I think, because there's a little bit of a problem on AMC right now, and it is a problem. I quietly behind the scenes, I stopped kind of publicizing these trades as much because, frankly, like, I wouldn't normally like hide that, but the idea of it being like what it is, which has been kind of a crazy roller coaster ride, Fang has not been the most consistent of these call outs. So I didn't talk about it. I did talk about it on stream. I drew up this diagram on stream like one day, like a week or so ago. It was actually probably like Tuesday the 6th or something, because it was right before, maybe Monday the 5th. It was right before this drop. I said it really should just drop and then go. So I traded, when it dropped, I bought 150 strike, because the next level up should be about 148. And so I bought those 150 strike when it dropped to 128, and they were up like a good chunk this morning. I don't remember the exact number, but I think I posted it in the Discord. I don't even know why I did that, because I didn't post the original trade. I guess it was more out of, it was 200%. Yeah, they were way up. It was more out of a, I don't know. I guess I thought maybe somebody else may have traded it because we did talk about it, but I doubt it. I think it was really, really one-off. So those are some big winning trades. Starbucks as well. The Starbucks trade got a little bit rocky for a minute. It went down, and my calls actually went red, but I didn't get out because the targets that I have are still there, and I don't really think that this is a huge setback in the grand scheme of things. If it doesn't go any higher, I wouldn't necessarily be surprised because this could be like a full 1, 2, 50-50 S curve. Technically, this is like a bottom, which could be like a 50% marker. So it may not go above 86. Now, I thought 95 for other reasons, but this has been a strange kind of flush out. And really all it's doing is kind of redefining the boundaries here. There's not really been a strong enough, in my opinion, a strong enough bottom made. This is fine as like a localized kind of either a phase B or maybe even a spring, but then there wasn't a proper back test. So one of my concerns right now is that there wasn't any kind of a real back test for this area around 77. And that's not normal. Like when you leave a range, normally you want to like go back and check it. So I thought that's what maybe this was. But then you look at what happened just now and it went over the recent top. So what does that mean? Well, AMC did this as well. So this is going to be pretty relevant for AMC as well. When you do that, after you make a low here, you make a lower low, you push up, you make a higher high, you're basically defining what could be a very real bottom. There's only two options there. So one is it's a bottom, like bottom, right? And we've already had repeated hits on those lows. So it's a reasonable estimation that could be a serious bottom, like finale kind of thing. Like you don't go back down there again necessarily. You probably just go back, if you did, to like 78. Because now that you've done this, you're essentially turning the stock around. Is you have to understand, like, until that point, there was no, even though these are technically higher highs right here, like, if you look at the trend, this is like a turn, right, on the market. So this is still not making higher highs. Like, after this auto reaction, it just kind of compressed, which means that it didn't change direction here, right? But what's to say it's not doing the same thing again? Well, it may be, and I think that could be part of this. We'll get maybe to that in a minute if we want to, but this to me is significant because of that higher push. Like it signifies like a second potential change of direction. Now, you're probably keen to point out, well, yeah, but it didn't push higher than 89, so isn't it still in like a downtrend? Well, yes and no. Like again, when we look at something like a turn, it's hard to kind of judge when it finally turns, but especially if it keeps doing this, which is like pushing outward. But in combination, this is the key. In combination with this return, right? It made the new low, a new selling climax, which frankly was mostly just buying because it happened in extended hours, and then it was just buying. Then you have a higher push that correlates with the creek jump. So I was saying, like, now it's sort of a do or die moment because you've now approached the creek. This had not approached the creek. So all of this price action previously leading to the new low and then the higher high here were all just setting up a potential bottoming action. Once you're done with that, you have to jump the creek. That's what happened here. So this creek is just a trend. It's really simple. It's a widening as well. So in the grand scheme of things, where is this going to go? Well, I mean, there's a number of possibilities, but you would say that it's very likely it goes back to 112 eventually. Timing of that would be susceptible to your own judgment, but I usually just do a simple like in and out trajectory just to see what it would be. And that's sort of like the earliest, in most cases, the earliest that you could maybe push it. So this would be your outward trajectory right here. And it's pretty close to where that bottom was found. So, I mean, in the grand scheme of things, is this fairly consistent with what you'd expect? Yes. Is Jump the Creek? Yes. Has it backed up and found a support yet? No. It might be doing that right now. And that's where you're going to have the do or die moment. And then eventually you're going to probably come back up and retest the top. And if you want to be conservative about it, we can just pick like the lower area. Usually it's back to where the compression started. So you'd say 112. That doesn't look like it's likely to happen till June 25th. If it, on average, and we're talking about an average between kind of the extremities here. I will say that most of the time, if it's widening down, it's like narrowing up. So you're not likely going to get it widening back to the upside. It happens, but based on the way the widening is, like that usually reverses and compresses. So if it kept widening, it would just be huge, right? So we usually see like a reversal, and it almost looks like a mirror. So you're talking about a window here of like maybe June 16th through July 11th probably, which is where the tariff deadline is. That makes sense to me. So something like this, maybe even a little broader. So that's a pretty big area. But is it possible it gets up there by that time? Yes. Does it have to? No. And there's plenty of other things that could stop it, and we could keep going and going and going, right? We still haven't really finished this bottom. And so the other thing I would do is kind of start looking at where are the rising ice levels, like that rising support level back here that was lost. I kind of have it drawn a little weird here because it looks off to me, but maybe a time frame thing. It's pretty low. I mean, it's right above us. So that's going to cause a bit of a headache, a bit of a problem for something like Starbucks, for example. It is sitting around the 50% marker of this total move, like in totality. So this area around 95, which is the calls that I bought, is kind of problematic. And so you could have a lot happen between now and then. It's a long distance type relationship. So there's a number of potential backups here. And based on how steep this creek is, it's ridiculously steep. This is certainly something that could come all the way back down even and fill a gap at 80, 50. I mean, maybe even chop through that. It would look bad, but technically if it makes a backup, again, I would have expected it to back up to like 78. That makes total sense to me. And it can do that on the outside of the creek now. So there's nothing really preventing this from sort of just chopping down if this is what the operators want to do. And then you have an M cross, 1, 2, 3, 4, with the 3, 4 being kind of odd because of the compression here. Does that necessarily have to be that way? No. I mean, and there could be a further extension up. Like this is a higher push, which is great. But sure, like you could have it go a little bit farther. There's no rule that says it couldn't. I'm just saying for the general purposes here, you've got a few different creeks now that you can interact with. Here's the biggest problem with something like this, and we're going to talk about AMC, and this is very similar. So just kind of like if you're watching and you have like a keen eye for it. And I have to check out XRP this morning because I missed a post from somebody on the Discord. I need to check that out this morning. There's a sort of an important, it looks like they've developed kind of a range here. Concept here, which is that once you've made this advancement and you've pushed higher, you really don't want to see it go immediately down to a lower low. Especially if the volume on this top is super high and it doesn't hold a support. So if this were really high volume on this push up and you're pushing above a previous high and then it drops through supports, specifically like probably right here around 82. Now you might be saying, well, you just said it could go down to 78. Yes, but there's a key kind of factor to this, right? Which is that it can't do that without making certain kind of qualifications. Like it has to stay on the outside of the creek. It has to be, again, volume-wise, has to be coming in on the bottoms. Otherwise, dropping back through here, especially just in the general, for the general purposes of things, could be seen as kind of bearish, because if it comes back through here, this is a really key level, right? This is a place you could see some serious knockdown from the short side. And you definitely don't want to do this too early where you're sliding beneath this kind of red line, which is the creek. So you do not want to slide backwards through a creek after making a new high on high volume. That kind of volatility is usually a sign of distribution, and we call it an upthrust later. So is it okay that this jumped over right now and it's, it could come back down low? Yeah, all that's fine. I think it kind of missed the window to do a really good back test here, but so it'd even be better to just stay above 83. And I think that's an easy enough call out to say, yeah, it'd be a lot healthier in some ways to just stay above 83 at this point, because you're not risking any of this business by dropping down. Okay. So is this bearish or bullish? Well, right now, it looks fairly bullish. We'd have to see it work out a little bit more to say that it looks bearish. But right now, because of this push, the way this happened, making the low first, then pushing up, that's a good sign. If it had pushed up here and then dropped down, I don't know how that even would have worked. I guess it would have had to not come that low. But if it had pushed up early and then come back down and made a new low, I think I'd be a little more nervous. But this is okay. I still think this is overall a little too early maybe to call it, and also a little too early to, if you're not already in it, maybe to just kind of buy in. I'm already in it. I bought in way down here, or around like 78. So I'm not in a bad position as long as it's up. The S&P 500 this morning, my expectations were that the S-curve was either going to finish here or here. And you can see it hit that marker pretty much exactly, which is great. It's not the end of this marker, right? So you're like, well, wait a minute, it's not the end. No, it's not. So there's a question mark right now in my brain about, is the market done? Or did I just pick the wrong top, right? And I had said that I didn't really feel that 583 was a bad target. I actually called it out several times in the last few weeks, but it was more about those triangulations. There's so many triangulations to 583. I also said frequently that we were going back to that March 4th area, which kept popping up in the charts. That's right here. Now, interestingly, some of the charts had already gotten there, right? Some of them had already gotten there. They got there really early. Like Tesla got there really. Tesla didn't get there quite well. No, Tesla got there early, but Tesla was different because it didn't get to its creek line either. So it was kind of different. Some of them triangulated around it, right on where their creek was going to be, like right where they would hit a resistance. And some of them were it was beyond it, but all of them seem to be portioning or targeting that March 4th area, including our AMC chart. Now, March 4th isn't that high, and you might be thinking, well, that's only $3, Booksy. That's not very high at all. And then if you really kind of squint at it, I guess you could argue that even the bottom here, which is 296, it's we hit 285. I mean, that's nothing. It's 10 cents away. Maybe it already got there, right? There's a whole other set of questions that need to be addressed for AMC. So we're going to address those questions in a minute, and it's going to be a bit of a slog to some degree. There's some of it's very simple. I'll start with the simple stuff. Some of it's a little more complex because of what happened at earnings last week. There was a lot of things that did not set up well. So anyways, this has been on the chart for a long time. And I said last week that, again, I was selling off here at this top and I was buying back in. I talked to you about it on stream. I bought back in on stream. And that was a 400% trade. So pretty huge numbers. So, the idea here is that there's market follow through that's been very good, very consistent follow through. I've got 3 big winners this morning, all of which followed through. And if you go and look at something like a Tesla, I haven't been trading Tesla at all. I really haven't. I'm trying to remember where it's at, but Tesla did break out here and it went up to that 320 region. And we knew that that was a potential target like a while back. Now, did I think it was necessarily going to get there? I don't know. I think at different times I said 303 was very likely. So again, you can kind of go and look at this and you can see that March 4th area is actually a little lower. It's at 270s here on Tesla. And then you can see this extension up is quite high. But notice that this bottom right here, which is where it's currently interacting, right, are these drop zones. And I had said that I thought that a while back that I thought 305 and 320 were possible. It took a really long time to get there because it didn't have enough ammunition here. And this is where I was most concerned about a potential distribution, that if this popped up and then came back through, which did not happen, that this was likely going to come back to 200. So I didn't trade down on this. I didn't trade it at all. I didn't trade up. I didn't get this big bullish run. You know, I got the first one, didn't get the second one. I did not participate in it because I was not sure if this was going to hold. Frankly, you know, this is a great call or great buy-in. If you did it and you managed to get it and you thought that that was going to hold and it did it, that's awesome. I was just not sure about it, so I just didn't trade it. It's that simple. To me, it was like, man, I don't know. Because to me, if this breaks down, it's likely going to go really, really low, like all the way back to like 200, even like super low, right? At least back down to like 230. So at this point, you know, is it bullish or is it bearish? I think that without a breakdown here of this creek at like 280, 281, I don't think you could say that Tesla is particularly bearish. I think that would be a bit of a misstep. So there's going to be a lot of bearish sentiment about it. That's going to continue. But from a technical perspective, like, is this bearish? Not really. It just jumped a creek. And as long as it holds above this like 284 level, and again, it could have a pretty steep decline. It could come all the way back down to 284, you know. But as long as it holds above that, it's presumptively, it's bullish. Right? Now, did it break back into the bottom here? No. Is this potentially just a big fat hook? Yes. And that's why I say I very stressfully say, like, it has to hold this area. If it drops through that, it is not bullish anymore. Especially if it drops through that, it's not bullish anymore. So I would even just take this and just kind of extend it and say, look, I get that this is pushing out right now. I'm all for it running if it runs, but it really needs to hold this area one way or another. Maybe it happens right now, doesn't even go down, or it barely goes down and it breaks back out. But it needs to find a support and then break back into the 330s, and then needs to find support again there. And I think if it does that, you're really in a strong uptrend, because that gives you like a huge amount of headroom. You're talking about the next legs up, which are pretty substantial, which are the next two kind of sections here, like right there and there. You're talking about moving from like 320 up to 390, and then 390 up to 470 to test all-time highs. So, I mean, we look at this helicopter view, it seems pretty straightforward. It's not quite in that range yet. It's like bonking its head on it. If it makes a stronger support and then pushes above it, it's still bullish potentially, and you have another push, you know, another support and push, it's going to be fine. But, you know, is this a good one to chase? In my opinion, no. Can Tesla just kind of tear and just like not check things and just rip? Yeah, it did it back here when it was ready to go. It just kind of went. It's a momentum type stock. I mean, there's all kinds of risk involved, but it definitely makes huge money when it moves. So I'm not going to kind of belay that point. I'm just saying, like, I haven't been trading it. So if you're in it, like, congratulations. Good job. If you jumped in a little too early on puts, then I really do feel for you. I did something like that on Palantir, and I thought it was going to go down farther, and it didn't. But, you know, I traded very light on that, like very light on my feet on that. So Didn't put a lot of money into it. I basically just trade based on what I think is more likely. If I think it's really likely to happen, I'll put a little more. If I think it's less likely, then I'll put a little less. So I put a lot more into SPY upside than I did like Palantir downside, for example. Right now, this still looks like it could be ready to drop, but who knows? You know, to me right now, it's like, yeah, I think it made that back up. This is kind of substantial. You know, it may drop again. So we'll see. But even still, like, it's not a huge play. So what's going on with AMC this morning, right? You kind of looked at it and then looked away. All right. So in the group that we have on Friday, I made comments that I think are reasonable comments. They were not built out of fear. They were built out of just general concern for what I was seeing price action wise. And my comments were as follows, that basically this doesn't look right. It does not have adequate backups. It does not have the nice kind of bottoms that we really need to see for AMC. It definitely has a stronger vibe of distribution because of the way it's setting up. Yeah, but you had flipped to being really bullish all of a sudden, right? Booksy, remember that? You got really bullish all of a sudden. Yes, I did. And let me explain to you the difference between my expectations on what would be bullish versus what happened. And it goes back to this diagram, which this is not like everybody's favorite. This probably brings back some bad memories, right? It's not a bad example though. In theory, we're really talking about the exact same thing right now. So if you recall, we've been talking about this quite a bit. But we talked about how this is an iteration and that it plays out maybe even multiple times here, right? This is kind of the expectation that this is like an iterative motion until it isn't, all right? But that is essentially just a way of describing this pattern that we've been talking about for a while, okay? Now, presumptively, again, without knowing exactly what happens, this is kind of what we might expect to see here, is that there is a bit of a creek cross, right? There's a push on resistance and there's a creek cross and it does it again. And this is where it comes lower. This is what happened in 2020. It just does it in a really weird way. And it's a little different looking, but it's there. Like I promise. So the reason I'm bringing this up is because this drop right here that happened with the Judge Zern decision, and this is just a diagram, okay, on the right. Ignore the red lines it's interacting with, okay? It's just a diagram. I'm just showing you so you know, like, this is what I think iteration-wise is happening, okay? That this is essentially where the Judge Zern decision is. This is essentially that big pump that we got right here back in December, okay? And it was very weak in terms of like the grand scheme of things. It didn't end up pushing up very high, right? And then we're in this mode where we're kind of looking at this guy right here, right? We haven't even really gotten to this other breakdown, so to speak. We're in this mode where like it could be that this has already happened, but it doesn't look like it's already happened. So we're really waiting for that kind of final pump and that final distribution and that hook. So here's where things are going a little bit awry, right? Is that you take that into consideration, okay? And we haven't really had that push. And when we did the comparisons to OBV and on balance volume, we're kind of like in a spot that looks really similar to where we were in 2020 before the final spring. So if you were to zoom back and look at that area on balance volume, it really doesn't look like we've made this move right here at all. This move is a massive hike and on balance before a big spring. And it's just not there. So it's an iteration, right? And it looks like it's just missing one completely. Like it's just not there. Why is that problematic? Before you go into a spring, there should be a big buy-in. There has to be a big buy-in, and I should say, because the spring itself is a liquidity check, But before you do that, you kind of have to do a double reverse. Like you have to do it because there's a sense in which you're trying to get out as many people as possible. Nothing creates more despair than like a fake run. But also it's about liquidity dive. It's like you approach a floor and you can't break it, or you're getting close to it and you're ready to go break it. So you take the stock up, reload your shorts, right? Get those bulls trapped as well. And then when you push it down, all the bulls are selling off and your, shorts are running up, right? And they're jumping in as well. And then when you get to the bottom, all you really have to do at that point is just stop the flow and then cover your short positions and do a real buyback in. And obviously, most of the time what they're doing on the floor here is that, and this happened here as well, there's a huge hike again in on balance volume right there. It's really smart if you think about it, because it's essentially like, without being kind of mean, it's like you're kind of telling everybody else in the market what to do and you're doing the opposite. So you just kind of set it up, right? So you set up the FOMO here, and then you're basically loading up on shorts, and then you just start selling positions that you maybe bought here on the way down, right? Again, when everybody's shorting it, you're buying, and then you're selling when everybody's buying, and then you drop the position down with those shorts in play, and then everybody that bought here is like selling off like crazy because they're like, it's not going to go with the rest of the market. Shorts are jumping in like crazy. And by the time you're at the bottom, you've already like exited this position. You still have those short positions. You can start buying back in. And that's what you see is there's a huge buy-in right after the little dip. Huge amount of on balance volume increase. I don't have it on the chart here, but it's there. Why not you just put it on the chart, Booksy? Oh, I guess I will. I just have to like scale it. Right. Look at this incredibly high buy-in before the actual buy-in. Look at the amount that's traversed here. Like over 50%. I'm like, it's basically over 50%, but if you want to say 50%, maybe it's about 50% of this drop off is reaccumulated right here in the bottom. That's crazy. It's not moving anywhere. It's not a 50% bounce. It's just that there's so much selling at this point that your buyers can like absorb it. It looks really crappy until it isn't, right? And then all of a sudden it's going the other way. And of course, you still have those shorts that you positioned yourself with. You can just cover. You got all the time in the world, right? If you do it right. So this big buy-in here, this hike in on balance volume, I don't think it's happened on AMC. And I know there's ways of looking at it to say like, well, I think it's already happened back here. Maybe this was it back here. And so this is just a spring and we're really just waiting for like a final drop through the lows. Why not? Why couldn't it be the same thing? I've already gone through this like a dozen times. I don't think that it's impossible that it's the same thing and that it already happened. That's not ever what I'm going to say. It's just purely like opinion, in terms of my analysis of it. If I'm wrong, I'm wrong. Okay. But I'm not seeing what we would normally expect to see here. Like, I just don't see it. Like, this doesn't do anything. It doesn't eclipse previous highs. It didn't even like exit the range here, which is really strange to me. I think there's a lot of problems with it. It doesn't have like that big backup, but it's a different schematic too. And I think there's differences that are very key that have to be considered. And then the big thing for me is iteration wise, I don't think it's done what it's supposed to do. So anyways, when we get to this place right here, all right, and then we had earnings, there was something a little off about it. All right. Now there's a lot of different comparisons that could be made. You can compare it to itself in different ways. But one of the things that I would say is a pretty decent comparison, is at least to some degree, is this kind of drop ledge, right? It's an M cross with a drop down, and you could again compare it to 2020. There's a number of things that we could compare it to. We've done that. This is one example though that kind of stands out because it doesn't go back below bottom, right? So there's like hikes here. There's a compression. This is an iterative motion. 1, 2, right there. And actually starts back here. 1 and then 2. It's starting to turn up, right? Like it's going to go up, but it's ultimately distributive. And this is where I'm kind of like, this is interesting because it doesn't come back down through the bottom again. It actually continually makes higher pushes until the very end. So it never makes a low, you know, in the grand scheme of this. It does continually push higher. So when we were looking at earnings last week, I said that 265 could present us with a really good bull case, because what had happened was that we were doing this kind of compression down and we hit a low here with decently high volume. And then as we were building out, we started doing what looked like a kind of a traditional M cross up. Now it hit 265 on some people's charts, it hit 266 on others. But I think if you get like too like in the weeds about it, you might kind of miss the bigger picture here, which is that this ultimately doesn't actually test the trends at all. And it doesn't push significantly low, and it doesn't have any real significant, aside from like the volume in this one candle, which is again partially upside on the 4 hour here, and that's where a lot of it is. It's like an up thrust with a pullback. Is like it's missing kind of that definitive bottom. And when you look back at the Judge Zern thingy, when this broke out, now I've got it kind of based out that way, but notice like how definitive that bottom is. Not only did it break through that ice level, which we didn't do, right? But it also comes back and it spends time like right around that zone where the creek jump happened. And that's pretty normal for AMC. Like this is very consistent with what we would expect. This is a little different. It's like very anemic. Doesn't feel like as strong to me. I don't really understand why they didn't want to come back down during regular trading hours. The jumps are pretty low. I mean, they're really way down here, and there's almost no hit on it. So it just kind of taps it and then runs up. Also of concern here, to some degree, and I didn't look at the on balance here. We might want to do that. But also, to some degree, one thing that's of concern here is that it doesn't have a break of the ice. So I was looking at the on balance, and when we got that big pump up in 2020, there's like 3 big moves. And the first one definitely breaks what would be considered any kind of ice level. This is a bit of a different setup than 2020 in that there's like a parallel structure here that goes up from bottom to top. And I think, again, this sell down, they're pretty similar in terms of their function. One thing that was very concerning, perhaps, that I just kind of wrote off is that this actually goes below that parallel. Well, maybe your parallels are just wrong. Maybe. I don't think they are, but maybe they are. I mean, it's possible. I don't think they are because I think this is a hit on the middle right here. And then this is the center. So I'm like, it would be really hard for me to change it. I think that the December 9th OBV hike is a hit. It's an S-curve around the middle. It'd be really hard for me to change it based on that angle. I could just weasel around it a little bit, but I'm not going to do that just because I don't like what the chart shows. So this is bothersome because when it broke out, the expectation would have been, again, if this is a compression, right, that this breaks out and really like has a deep pullback, maybe even comes back down a little bit more than it did, and then breaks above. And you can see like the issues that I'm running into here. So there's no there's no clear backup. See how there's a backup here on balance, even here during that. So there's nothing like that here at all. Like it just kind of barely taps it and then kind of floats up. Everything about it just does not look quite right to me. And I have this kind of itch in the back of my head that if it's going to go, it should have been going now. Like it should have run up already. And I don't know what the purpose would be of backing up again this week, if not just to hit the retracement and just run. The only thing I can think is that it's distributive. And so when I look at this, one of the concerns that I have is that this did not go above. I said it on Friday, I think, again in the Discord. I was like, I'm really worried it just goes to 284 and then drops down to a new low, because it's not making those backups and buy-ins the way that you would expect. And that on balance, guys, is still like hiking way up. That's not really what I want to see here. Like, I don't want to see the on balance volume hiking up like really high when we're not even breaking out, really. I mean, and that's the other thing, is like, we did break out, so where's the boom, kind of, so to speak? Some of you guys are like, I remember that. Where's the boom? You know, from Looney Tunes or whatever, Marvin the Martian. Anyways, so I'm like, it should have happened. It didn't happen. It's just sitting here. So we had talked about pretty extensively, like, the possibility that it at earnings even, that this could come down and sort of finish low. I don't think it's beyond where we are. Like, I don't think we've gone beyond the point of no return. In fact, the way this is setting up, I'm very concerned right now, because this looks like a big old hook, that when this does come back down and it tries to find a support, that it may be this really gnarly backup here, at least temporarily. And I don't think that the price action necessarily holds up very well, right? And so there's certainly a sense in which this can't come back below 265 again, and not very likely anyways that this remains healthy. And I would say that, just kind of like Starbucks earlier, there's ways to get down here that are kind of slow, where you could come down low and maybe that doesn't change the overall breakout. Like, that could still be a possibility. Like, we didn't get it here, but it went high first, then it backs up above the creek, right? This would be very comparable to what we see here, minus the early break, right? Sure, in some ways, yeah, I think it's possible. And this could be a Monday the 19th kind of move. But it's like, all of that has to happen in almost slow motion, like over the course of a week. If you slide back through that level too early, especially, you know, within the next day and a half, by maybe Tuesday or Wednesday even, it would be, Wednesday might be okay, but Tuesday especially, if we get like a rug pull in the next, I don't know, 8 to 10 trading hours or something like that, that's bad. Like, it could easily slide pretty darn far. And I think that you're looking at those 240s again as very likely. And what that means is that this whole schematic, I wouldn't say it's completely changed, but I would say that that's a dangerous spot to be in. So wait, no run? Here we go again, Booksy. It's the $8 thing all over again. You got to understand, like, the way I see it is that on balance volume has already made a breakout here. Okay. So, like, don't misunderstand what I'm saying just yet, because technically this has already broken its creek. If it came back down and came low, yeah, it might look kind of crappy, but as if it held here, who's to say that that's not the spring, you know what I mean? Locally. Anyways, it may not be the big one, but it could be just fine, right? If it holds higher and makes a support here, even better. You know, it's already on the outside. So in some ways, this, even if this went back down, it's like, well, crap, we just lost the creek. Well, you did, right, in the price action. But that doesn't necessarily mean you've lost it here and on balance volume. And I think that matters. When we see RSI cross up and over early, and it maintains its hold, usually that's almost like a divergence in, what is this cat? What is this cat? There's a little pretty calico cat on my porch. She looks really scared. She looks really young. She's lucky my other cats aren't around. They would get her. So here's what I think, okay? I've already done these diagrams, but there's pretty much just like three main outcomes from here. I'm not going to go much longer than that. This is the kind of price action that I don't want to see, right? This kind of like hooking price action. That's what I'm nervous about. It looks like we're doing something like this. See how it like refused to come back down? It went high first, and then it drops below. You don't want to see that. You know, that sets up for a bad situation where you could be in this like hook mode, and we've done this before plenty of times. So I am mildly concerned that, and you guys are like, well then what? Again, I'll show you what I think, but I will say this, that the way this is setting up is highly unusual. Part of me wonders if it's because we're not done running on everything else, and maybe the reason that this isn't moving is because, to some degree, liquidity rotation hasn't happened, like selling on one and buying on the other. But you have to just kind of take the chart as it is, and we'll look at GME too. So let me pull up the other thing. Hold on. I'm going to use the screenshots I already have because it's easier for me. So I think let's just do this. So we're going to go here, and we'll use this diagram. So this is a very loose kind of version of what I think happens if it drops first. So you basically have like an up thrust here. You drop down, you come to like 240s, and then you could just take off and go to 4. And then you basically have like a quadruple, or a 1, 2, and then 3. Where's a big double flush motion. Flushes, then goes to the upside hard, then comes down really hard. Measurement-wise, this type of setup actually works just fine. And it also, as you can see, still can maintain a creek jump. So these little like cat ear hops that happen, and I'm using my mouse to show it. This is 1 right here. This is 2 right here. They're still creek jumps. Even if they're going down and making lower lows, like they're still jumping creeks. So at some point, you don't do that anymore. It's going to be a change of character. It's going to reverse. And it's ugly, but it would reverse. And it would have a squeeze because it's kind of fulfilling all these others that haven't yet reversed. We've went through this a few times. So on the one hand, you've got a series of up thrusts or one major up thrust going up to 4. That hasn't, in my opinion, started. I mean, if it starts, it's going to be today or tomorrow. It has to be. If that doesn't happen today or tomorrow, I don't really know what to make of the chart except for some of these other scenarios. So this would be like a backup, probably comes down to the 240 area. It may not go beneath 239. I know a lot of people expect that to happen, but I don't think that's necessarily the case here. We'll see. Okay, I don't think it needs to happen if you're going to come back down again anyways, but this is roughly what I would think that looks like. All right. Okay, so then the next one on the docket, this is kind of the same thing, but up close, so you can see it a little bit different. So this one, I don't have the push up to the 285, but I mentioned it in the Discord. Like, it wouldn't surprise me if this popped up to 285 first before sliding back through, or 284, because it would go over the previous top. The reason that I said that, to some degree, is because of what happened previously. Where was it? Right here. This guy. Where it just inches above the top and then it slips back through the creek. And then it makes that lower push. It's almost exactly the same, right? And that's not a good thing. So again, the lack of that real strong bottom before trying to go up really concerned me going after earnings. So again, like looking at this, are they basically the same setup? Yeah. There's 2 key differences here, and this is what leads me into those little Discord diagrams I just showed you. The first key difference is that the angle of this descent is extremely weak by comparison. So if you look at this, the angle is like flatter. Well, that's good, isn't it? Yes, because if you're just going to go back down and check the creek, this angle is not nearly as low. In fact, I said it last week, I think very briefly, but I said that maybe right at earnings that because it took so long that if it does just drop, and depending on how quickly it goes, it could be coming back beneath the 239, where that wasn't really on the table before. I was like, man, I don't think that's going to happen, right? Because of where this was. Because earlier, if it had dropped around earnings, it may have come down to like 256 or like 250. If it drops now, it just went straight down. You could see how like over time, that could get you back down to the 239 floor, right? In a similar motion to what we see here because of the way this is moving, unfortunately. All right, that's the first key difference. This is a lot flatter, the angle. That's a good thing, right? Yeah, it is. It is a good thing. Also, the 265 hit because this technically checked this creek. So if you want to say like even still, you could even say, well, this actually already checked. So maybe it's the next one up. Yeah, I mean, that checked too. There's one right here. It's even higher. So we've got a lot of pretty flat, like they're not real low ball creeks. This was very, very steep right here. It did not check it on the way out. So when it drops, it comes down pretty far, right? That's the first difference. I'll move it to this chart. Hang on. The second big difference here is that the previous one had a lower low. This is a sign of weakness, right? Now, there's two ways to interpret this, because one, you could say, well, the weakness is there and it follows through on the weakness by kind of pinpointing itself. It's not perfect, but it pinpoints that area, right? And I would suggest, yeah, that's accurate. This gave you a pretty good idea of where it was going to go, 259. Didn't give you the best idea of timing, but it gives you a pretty good idea of where it might go. You know, that triangulation. It's fine. But this is also an SOW. Like it had already pushed beneath the bottom, and then it was coming back up, and it hooks by going high. Did we do that? No. So, I know I'm talking like in terms of bearish outlook here, but it's important to recognize like this is distinctly different in some ways because it does not go below the previous floor. It's not nearly as bearish. So if you were to interpret this bottom right here as the same kind of sign of weakness, it's like, well, I don't know. I mean, that comes down pretty far, right? So couldn't this still like, you know, give you a good indication that this is going to come down to like 226, right? Isn't that magic level that you talked about, Booksy? Well, it's not a magic level. It's just a level that represents $1, right? For the purposes of, yeah, right around there, somewhere 230, something like that. So that's pretty low. It's still not like, that's still a pretty big distance, right? I mean, it almost looks like the same distance as that. But what I'm trying to say is I don't think you could really interpret it the same way because of that previous bottom there. I don't think you can do that. Now, strangely, you know, if you were to go back and use like this low and this low, it's going to give you a very different outlook. It kind of gives you what has become the center mark here, which I think is kind of interesting, where this is developing like outward. I don't know if that one's going to be particularly helpful for us, but I will say that, again, this one's upward, not downward. So this is facing down still because of that lower low. This is actually facing up. What does that mean? I think it's pretty obvious that what this is indicating is that this is basically iterating into an arc outward. So naturally, like these are flattening out, right? And now it's kind of positioning itself upward. Well, these intersect right here around 260, 261, which is, again, probably part of the reason why we're holding as much as we are around that 265 level. I don't think that's necessarily an accident. It looks like that's kind of where the development of the curves are heading. So directionally, this is the direction that bears were heading, right? It's not significantly low. You're like, well, what about this one? Well, that's a creek cross, right? That's a wave. So this developed a wave by pushing up away from that marker and then driving back down through it. You see that? But you see the bottoms themselves are actually where the trend is at this particular point in time. This just pushes up, goes back through, and then flushes back above. And it actually does so in a fairly succinct way. It almost looks like a perfect 50-50, 50-50. So now it's doing something similar where it's kind of cresting on it. So again, you're like, well, then what would that do? Big picture. This is kind of interesting because if you look at the 285 or the 284 and you drive through there, again, it doesn't lead super low. It leads to like 245, which is 1 point below this 246 bottom. Well, that's consistent with what we thought might happen before, not with some massive drop all of a sudden, but rather just making a slightly lower low. Yeah, it is. If you look at this in combination with what we see as like a potentially like new uptrend, it could go a little bit lower. For example, it could be down to 238. What's 238? 1 penny below the all-time low, right? So you've got one that's 1 penny below this guy. I mean, this is really, in some ways, it's that simple. Like, both of these only target like a penny below previous lows. They're not targeting like ridiculously low lows. This is the only one that seems to target something substantially lower right now. Yeah, but Booksy, this is a hook on LBV, so couldn't that mean that this ends up capitulating down instead of up? Yes, it could. We're not there yet, and I don't want to get into like the weeds on this too much. I will say this, there's never really been much of a, in my mind, there's never been much of a strong chance that this thing's just going to rocket and not come back down at least one more time. This might be the biggest case that you could make for it, is that if you're going to make that case, is that the on balance is hiking up and that this is just a really subtle spring in that, yeah, the price action's not moving anywhere. It hasn't broken out yet. You know what I mean? It just hasn't. Sitting right underneath this, it looks like a hook, so it looks bad. So the price action hasn't made any kind of advances here. It hasn't had a fake breakout, really. This is kind of breaking out, but it's kind of not. It's not going anywhere. Yet, for whatever reason, ever since, even the day before earnings, the on balance has been hiking up and breaking out. You could make an argument, I suppose, that, well, you're wrong, Booksy. None of this is going to happen. It's going to come down. And this is going to be the final spring motion. And it's not necessarily going to go, I don't know. It doesn't make any sense to me, again, based on what we've seen, but it's not necessarily going to go below like 25 million or something like that. That really a spring to me? Not really a great one, no. But I guess, in theory, like, could that be it? Maybe. It's backwards from what I was thinking because it doesn't have a real hike in price or on balance, for that matter. It's just a simple little hook. I would still suggest, just based on what I'm seeing visually, that this is just going to be a on balance kind of spring locally before a bigger push up to kind of get you going here. I'm still thinking that's more likely. But if you're of the mindset that you're going to have a massive run up in May going into June, and that Booksy's wrong, it's not going to come back down, we're going to do the spring now, then I think you could probably make this an argument that perhaps there's a seller, or there's enough sellers here and not enough buyers here, that they don't need to bring the on balance volume up high. They're not going to drive it up far. They're not going to do the extra move because the market's ready to run. They're ready to take it all the way up to $12 or whatever, $14, and they don't want to do this kind of secondary pump and dump because they don't want to trade down here very much. You kind of have to say all of those things, right? That they wouldn't need to trade down here in the $1.80 area. They just need to make a lower low. So instead, what we're going to do is just as our phase B bottom, we're just going to do a tiny little weird dippy spring and then rip. It's completely inconsistent with the only other major example we have of this kind of move. But I guess you could say that. Maybe it's going to do something like this. But I don't know, man. The problem that I'm having with this is that the only other examples I can find of this flattening are really bad for the for this stock. And they don't have just a drop. They have like usually they have a big pop. This is kind of the only spot maybe, and this is a really small example, but this isn't one of the only spots I can find that doesn't have like a massive pop right here. It kind of just slumps down and it has this little hook and then drops. It's a completely different time frame, right? We'd have to look at it that way, but it's kind of missing pieces, you know? Well, it's not May 16th yet or whatever, right? That's true. It's not the end of the week yet. And you got to remember, like, this did happen on a Monday and a Tuesday. And then Wednesday through Friday, it's coming back down. And by that Friday, it's back down to that target. But it's a 2-day up, 2-day down kind of thing. And if we're thinking this is much, much smaller, do we really need to move right now? No. So I'm like still on the fence here. This has been a really difficult week and a half because I've been going back and forth, because the setup isn't really what I want to see. It's not breaking out in the time I want to see it break out. But then again, it's like, what would be different about this time would be the timing. Because if you don't need to move as far, it's half the move. I mean, it's not even half the move. It's like 80% or something instead of like 300% or 200 something percent. So it's not substantially large, this move. So if you think about it, do you need 2 days to work your way back up and 2 days to work your way back down? No, you probably could manage it with a day up and then a day back down. Like a big gap up, run up for the rest of the day, and then the next day is down and falling, and then it's back down to wherever it needs to be by Friday. Sure. It would make perfect sense to me if it took half the amount of time. So instead of taking 4 days, it takes 2 days. So we have a few days. Like I said, I really think now till Wednesday is kind of your window. And then after that, I think the window's gone. And you're looking at either next week, right, which is Monday the 19th, as a possible window. So if this went low and it comes down to, let's say it goes down to 2, doesn't really matter. It could be 238. It could be between these two. It could be 243 or something. You still have, I think, the rest of the week. If it works itself out, it could come up Monday the 19th. If you don't come down low, and you're not going to come down low, this really needs to make a big move, I think, by Wednesday. My cats are dangerous. Sorry, I just saw your comments. Every cat's territorial, but yeah, my cats are like teamwork dangerous. There's 2 of them. They don't always get along. They're brother and sister. But if there's like an invasive party cat, they're usually not very nice to that cat unless I go out there and put my scent on the cat. Which isn't likely to happen because this looks like a baby cat or like a teenage cat, like a really young cat. So they're probably going to run away if I open the door. It's not ghost cat. See, like ghost cat, they'll tolerate ghost cat because I've come out and fed ghost cat and pet ghost cat. Pirate cat, they do not like pirate cat because we don't tolerate pirate cat because he's a jerk. Call him pirate cat because one of his eyes is like always basically closed. It's like half closed. It's not, he doesn't have an active disease. He just got injured or something and never healed. But pirate cat's kind of a jerk. And he fights with my cats, so we don't be nice to him. We run him off because he's just not nice to them. He's super aggressive. But yeah, my cats will team up against a cat that's invading their space. They're not particularly big. My indoor cats are huge. They were bred indoors, so they have extra food to grow with. They're humongous. My two male cats inside are gigantic. I won't let them outside. They probably just get run over, but they would dominate. They would destroy all these like outdoor feral cats except for their lack of experience, just based on weight. Anyways, but anywho, the one that outside is the girl cat. She's Zelda. She's pretty gnarly when she wants to be. She's not very big. She's just scrappy. She'll scrap with cats a lot more than the other one. Edgar is usually really mild-mannered, but he doesn't fight unless it's that pirate cat. He's the only cat I see him fight. I don't know, man. Cats are weird. They're very very territorial. They like their spaces. I don't think that's a weird. I think it's just normal. But anyways, so there's kind of like good news, bad news here. Okay, so good news is that I don't really see this just dropping into a full-on spring still. I don't see that as nothing worse than an outside cat that thinks he's an indoor cat. That's Edgar. He just lays around and he's so lazy. He won't hunt. Although I'll say this, he's the only one that's caught a squirrel and a full-size bird. He genuinely surprises me. I don't know how he did it. I'm like, what? You don't do anything. I've never seen him and he's got this breathing thing, so he breathes really loud. Like, how do you even sneak up on a squirrel? I have no idea. Anyways, so this looks good for me because I'm like, on one hand, yeah, like if all this stuff broke down, it would be crap. We would be like screwed, of course. Especially if you started dropping through here and hooked, yeah, this could be very bad very fast based on where this on balance is. You could say that could be very bad, right? But I don't think the way this is set up, it's not particularly convincing to me that this would drop significantly low. I think it could, again, achieve a slightly lower low and still rock it, which might seem a little odd to some folks because they're like, well, I don't get it. If it's right there, it looks like this cat ear thing. Why not just dump? Yeah, I get that. I think we're still in this place of relative uncertainty because there's been this itching feeling in the back of my mind or a thought that we are in a position where it doesn't obviously do what you expect. And the one thing I've been kind of, maybe over the last 2.5 weeks, you've probably heard me say it a half a dozen times, is that I'm very concerned about this 3 to 330 level. There's still this thought in the back of my head that could be problematic. Like if we dropped here, for example, let's say we only went to 265 and then we ran up to like 330 and that's it, and you start sliding down, the way that our operator runs this chart, it would almost make sense to me because I hate to be like that because it's like another scenario and you're like, well, there's too many scenarios because you just like pick one. What's most likely? I've already told you what I think is most likely, right? That we get this massive upthrust that then drops back down to new lows. But there's certainly evidence out there to suggest that there's tons of evidence to suggest that we get this big push up to 4, even 485, right? There's tons of evidence. It's not for lack of evidence, okay, that I think that is the most likely. It's for an abundance of evidence. But there's also not a lack of evidence that 3 to 330 could cause a major problem. And if we're not going to need the liquidity, and I don't know the answer to that, or maybe even worse, this liquidity hikes all the way up, but we don't run very far. We get a series of like really bizarre walk-ups like we're doing right now, where the price is moving like 10 cents, but the OBV is coming way up, 4 or 5 million at a time every 10 cents. Like that's a bit of an issue. to me. There's a problem there in consistency. You understand where I'm coming from? It's not something that could have been predicted on my part. I'm not trying to like cop out of it, but I'm saying that because I wouldn't predict that, that's something that seems likely. It's almost like that lurking thought of, what if they just take it up and they get the on-balance high enough to drop it down low, but the price isn't moving? How do you do that? I don't know, but apparently it's happening right now. You know? Does it make sense from a technical standpoint to do it? Not really, but I guess I'm not here looking at all the inner workings of every little piece of the market. There's probably things I'm missing. I'm really looking at pattern analysis, wave analysis, and the fact that this should have this completion is a great thing, but it's not a guarantee, you know? So there's a certainly amount of maybe issues here that I could not predict, right? And one of the things, again, that bothers me a lot is thinking about this last week, and I think I said it in the Discord again, was that I said it looks kind of bearish, or maybe easier to say it just looks off. This was on Friday. Very similar to our distributions, not our usual accumulation. Maybe that's by design, but I did not want to approach 276 from the bottom or on a bull shape. At the very least, I'd feel better if we'd made the drop, which I've already said. And I said it's a blessed setup looking at volume and pattern. I'd not be surprised if it hit 285 and then made it to all-time lows first. The main hope I see is the idea of iterations, which are these multiplications of these up thrusts, okay? Dropping to new lows next week, followed by a punt to 4, seems to be on the table, so be prepared. And that's really all I'm saying right now when we're looking at this, is that this seems very possible, okay? And then I just showed you guys these. I said this could happen, and if it did happen, it would take another week, probably May 19th. I've already said that much. If we go this Monday, I do think the squeeze drop method, that would be likely. That's that pump dump. But then also there's a possibility it just runs. But there's 786, 854 retraces. Those are pretty normal when you're doing that pump dump thing. We're not there yet. Nothing like has happened yet. And then I said that, to be fair to Katorin, who was talking about just upside, I said there's one example of that. And that's the one that I was trying to kind of show a minute ago, which was this guy. This is an example of one where it just doesn't actually do the final dip. It doesn't dip down below the previous bottom. It actually just kind of continually makes higher highs on the bigger picture until you get to the end. And then it's like this final drop and pump. And I was critiquing that a minute ago when I first started. I was saying it's kind of missing that drop. That's why I wanted the 265. It's only really there on extended hours. But if you include extended hours, this has a whole lot of other problems, because extended hours has this massive hike that happened right here or something. There's like this big upthrust right here in extended hours. It just doesn't really give you a good cause, you know what I mean, to think this is bullish. So I was saying that this was an example of one, and this is kind of the way that this works out. So I did the comparison, and I showed it via screenshot. The timing of it's pretty similar, as though there's a 1, 2, 3, and each of these waves has like a hook. Now there's a compression going on as well. There's iterative compression going on during this time, but the bigger motions are all kind of succinct. We do have something like that with the RSI. I did the build out. Now you look at this and you're like, it's pretty similar. In fact, there's a lot of stark similarities to it, to be frank. If you look back and forth. And this one I can use like the regular chart, because I think I already have this set up. We'll keep on balance down there, but I want to kind of focus on the price and the RSI. And so this is an example that's very odd. Like, this is a very odd one because it doesn't go low. It doesn't really have that last push and jump, which is kind of what we were talking about a minute ago. Instead, it just kind of goes. It has a build out and then it just runs. I'm saying right now I don't think that that's very likely because of the way this is building. It's ugly. But maybe it's just a delay tactic, so on and so forth. Some of you are going to say, well, if it jumps at 180, it's going to go. And I'm like, no, this is the same 180 4-hour. It's not a guarantee that it runs. In fact, this is pretty normal that it jumps above it, which would be for us 318, goes to like 4, and then comes back down on top of it, back down to 3. That's you right in the right spot, right, for what we would expect. So this is the example that I used, and I tried to, let's get rid of the unbalance. It's just cluttering it. I tried to make it as one-to-one as I could in terms of like what I see as likely in terms of iteration, not anything else, because obviously this is different in a lot of ways. But in terms of like where those iterative motions are, I think this is the right way to look at it. You're going to have to ignore that little bit in the middle. It's kind of noisy, but it is what it is. Because ultimately this is the low that's made, and then this is approaching those lows repeatedly, right? And when I started looking at the iterative flow of this, I was like, well, this is an LSPY of sorts, and this top range comes back pretty high, right? But it's never really left that whole area. This is generating like downtrends, which are like signs of weakness. This points to where you're going to go later. Again, this works fine with the chart as it is. These signs of weakness do point to where we are now, but like works even better with it works much better with the lows that are found in the chart shift. Like this is pointing towards those chart shift lows that are hit on the drops. But yeah, this is an example of a similar motion where you've got like weaknesses that are pointing down early on. Then there's a triple motion right here. It's a little strange because this ends high, but the actual RSI build out here is quite similar to what we see here, which is that the peak is early on. It's the first move, which is this massive move. Then there's a secondary move after an SOW right there, which again, very similar. You see the SOW right here back in May. You can see a sign of weakness building right here. It came too low. It goes up again, but this time the RSI is divergent on the 4-hour. You can see the same exact thing February 2023 as you see in June 2024. And then the final one does push up. In this case, it makes a higher high. It's a widening top. In this case, it's narrowing. It's a narrowing instead of a widening. But funny enough, the RSI does the exact same thing, which is that this is building down and then it pumps up one final time. It's like a big hook. Same thing here. It pumps up, fails to break. Then it goes into like this distributive pattern down. Okay. And it builds out into a bottom. And this happened for us, there's two spots, but predominantly like the main ones are this bottom right here, which is the really like October through November bottom. And then there's another one right before that kind of sets up the stage on the RSI, which is September through October, September 26th. You see the same thing right here on this bottom. There's like two areas that establish bottoms. Again, the first going lower, the second going higher before the next push out. These are interacting with this cross. And this is really important because this is a wave right here. And I was like, oh, well, that's really similar because even though the obviously the look of it's a little different, this is actually all interacting with that wave and generating some of these trends that are kind of built into this early 1, 2, 3. It's hard to see it, but there's a ton of information here, of data here that supports these. I had these anchored real low to some supports right here that follow through all the way to that upthrust, which is again a creek check on a bigger picture and a liquidity check. It's like a triple intersection right there. These end up being very significant in terms of the wave, as you can tell. So this is like a build out of the wave. It's kind of developing the structure perhaps to some degree that it's going to follow through on later with that upthrust. It's just a different way of looking at a distribution, but it's a very simple way of looking at it. This is the same thing you could say right here. You know, there's no difference in these big picture versus small picture distributions in terms of like where directionally that was headed. If I can do it. The difference being, of course, like how dramatic, you know, this or that might be. But it's the same idea, is that you have a failure to break, right? You have an S curve as a result, a hook. And these are built in, so they're not usually impossible to find, right? They're usually built in. And I would actually go so far as to say this in the long term may have been used. You know, we talked about coming back potentially to, you know, at some point to really high highs. Like this could have been used long term, if not for that chart shift. I think that it's not going to likely hit there, but I do think this is very possibly a a bullish directional input of like where you want to go way later. It does do that here. You know, it's not the best example perhaps, but it does do it here where there's a pretty strong directional input, especially from the last two hits here. It ends up being like right on the dot where you're trying to go later. So just something to think about. I'm not really going to explore that right now. But anyways, so when you look at this as a distribution, it would make sense then that that hook pattern would exist. And then you see that here as well in our particular setup. It's pretty large. And I don't think that that's necessarily wrong. If you're going to try to make that drop, that would make sense to me that you might do that. So I was looking at this as a series of just similarities in terms of like the motion, if you were going to do a pump and then a drop. So what about this one? Well, this has a much broader bottom. So I used the bottom and the top from that April area 2024. And then again, I found some really tiny micro trends in that bottom that are kind of like establishing this whole structure, which is again amazing, but not all that surprising. And specifically like right here on that LSPY, there's a really good, or that preliminary support, if you will, there's a really good double hit right there that heavily supports the idea that this trend is actually already embedded. So even though these don't seem to have any interactions, you're like, well, there's nothing there. There's a ton of it right here in the middle. A ton of it. Like the interactions right here around the middle are numerous. There's dozens of it, which is kind of interesting. And then the shift here kind of drops it to like a 50%, perfect 50% marker. And so I went back and I was like, all right, let's look at this. If it's the same thing. And all I did was I identified, again, where those points of interest are and like where that's developing. Granted, you could make an argument it's different, but I'm not going to do that right now. And I think this is it. I mean, I think it's fairly straightforward. There's a different kind of interaction with it because this is very spread out. You can see right here, in this example, in June 2023, this is actually pushing up. It's forming out this creek coming down, which is like a triangle pattern, like a descending triangle pattern. That goes back to the top in August, okay? We have something very similar because we're going back to this peak here that we made early. This doesn't go back to an August top. It doesn't. I mean, you could do that, but I'm not doing it that way because I'm using like what's local, and that's the peak that was made on May 14th. So a bit different in that regard because like, well, that's not the same peak. I know, but it's still the creek. Okay, so the creek that's being developed, this is kind of pushing up against that creek. It's rejecting and then going back down for a low, which is like the final low. And again, this is all part of a bigger kind of curve that's like losing this upward momentum. We did capture that upward momentum here. If you take this pattern and you drive it to the upside a little bit more, you can see this is actually a very consistent parallel structure. Like very, very consistent. It goes back to, again, even like January 2024. You can see that structure is still present. So I think this is a really strong contender for those parallels in terms of upward direction. It's doing it here, 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 here. There's a lot, right? Even here, because you can see this push and then the hook right there. So I'm arguing that this is the right one and that it's actually just spread much wider. So it's like instead of it going kind of shallow across here and then staying tight, it's got a longer distance to travel, right? But then what? Well, then it goes to this kind of outer creek. This is a break of the major creek. So this is important. It's like a triangle, right? There's a break at the main creek here. That did happen in the Judge Zern decision. It broke out, and that's what partially what gives you this massive drive up. So the breakout here is really eminent. It's like essentially right where we are right now. We're slightly below it, which is why I'm still not saying like we're going to run, right? Well, wait a minute. Why are we slightly below it? Why aren't we like through it? What if you use this top instead of the other top? Well, I'm not doing that. There's a reason I'm not doing that. I'm using the closing value of like 520 instead of the peak, because when I went and looked at where these creeks were, that wick is kind of irrelevant. Like it doesn't accurately represent. It's not a bad trend. I mean, you can use it. You can drive this up and it's useful. Like it's there. It's being used later. But in terms of the initial break, it's actually like more closely associated with like an inner closing value or opening value on this 4-hour chart. And I think that's the case right here as well. There's definitely more than one possibility, but what I did is I went back and I looked at, where are these spots that are the most commonly interacting? And one of them is right here. This is going back to the peak on July 24th. I'm not going to go, again, crazy detailed on this because you might be starting to see some inconsistencies, and they're there, okay? I'm admitting to you that there's some inconsistencies in terms of the layout. I'm chalking it up to my inability to like figure everything out perfectly. I'm saying that this could be a little bit higher. It could be like that instead. That's fine. It could be that wick from July. It doesn't really make a huge difference because in the end, that's just kind of like a target zone. And if anything, like if you use the other ones, it actually just makes the target lower. So if you want to do that, that's fine. Something like that, that's reasonable. It really doesn't make a huge dent over here anyways. And this doesn't make a huge difference to me because this ultimately goes beyond it. So I'm really just looking at it as more of an estimation. And then where does this go, if and when that happens? And what I can find that seems most consistent is this particular motion right here, which is like an LSPY, right? And then there's another one before a big UTAD. This guy right here seems to be most closely associated with the center. That is where this goes back to, which is interesting because we talked about coming back to 485, which is like this liquid middle. If you look at the liquid middle from this structure in 2023, you'd probably say it's right here because this is where the widening is kind of forming out. It would be hard to say it's anywhere else. It's also associated with the previous low, but this obviously goes above it. I did a Fibonacci and it's a 618 level. If you take the fib from like the top to the bottom here of the entire range, this is like really closely I think I got it a little off. This is like really closely like a 618 level that it's retracing to on the big picture. Where's the 618 level on the big picture here? Well, if you use the same markers, which again, I'm using like that third top, not the first two. The 618 is actually right there at, this is kind of amazing too, because these numbers are all the right numbers. I was like, what? Those are all the right numbers. So there's a 482 level, which is the 786. That's very close to the 485 call out. There's a 415. That's right where it should be on that hook. There's a 330. That's 336. That's right where that is. And then there's a 295, the 296 call out. All of those are the levels that we already have. So this has been built on a very strong Fibonacci range. And so if you look at it that way, it is pretty much 1-to-1. It's weird because it doesn't look like it would be, because again, the third one is so different than the others, but it's there. It's basically the same. If you look at where the fibs are and the relationship to everything else, it's actually interesting how similar it is. So if it went to 485 or 483 on a big pump, it would be the 786 retracement, right, from the top that occurred in July of 2024. If you only go to the 618, which is what happened here, then it's the 415. So when I look at this, I'm like, all right, so there's a lot of consistency here. It's just that the overall structure appears a little different because of the way these levels set up. I don't think it's necessarily a bad thing. It's just where they are. So I'm looking at it like, all right, taking into consideration kind of where these things are structurally, what happens long term would be, again, maybe a dip down, but it's avoiding it by going up first. There's a potential hook here. If you consider the fact that this is essentially like an S curve, it makes it a little bit easier to understand, because the structure here, although it's a little bit willy-nilly, maybe the way I'm doing it, is basically just attempting to drive up through this like $54 area now, which is where that moving average is, come back below it, and then drive up through it before distribution. And that would be very similar to what we're experiencing now, albeit, it's a little different in terms of the extremity, which is very extreme, but you'd have this motion right here, and I'm starting to see that connection now too with this S curve, which I didn't try to do before, but now I'm looking at it, I'm like, yeah, it's pretty clean. That's like, where's it going to be? I don't know. So the weird thing about this is that this goes like straight up at the end. And I don't know, maybe you can't do that here. Also, I'd have to figure out how to draw this because, yeah, I don't know. This is tricky. Because, you got to make sure it's consistent with itself in terms of like the middle, like where the middle is, all that jazz. I'll have to do it a little more concretely in a minute, but we'll try it. But this may be an accurate way to look at it, because the final drop here is like below the S curve, and then it's a big slingshot motion to the upward portion. The reason I said I would have to like figure out where that actually is not matching these three, because it includes the first low, which obviously isn't part of these 1, 2, 3. So these are not really accurate in terms of like where the middle is. The middle would be here somewhere. Yeah. But it's close. It's really close to maybe what's expected. And that does look really good. So anyways, you get the idea, right? So there's a couple different markers. One is this, and I meant to make this green. One is that 415 area. That's consistent with what we expected on a backup. That's actually very consistent with what we think 2020 looks like. It looks just like it. It's also consistent with what you see as like a middle. Notice how similar this is right here versus what we see back here in January 2024. So it would make the most sense to me that this needs to come up back to 4 if it's going to try to drive down again one more time. Highly consistent in terms of what levels are being checked. It just is. When you look at the 618 level and not just the 0.5, the 618 seems to be more associated with where this guy was camping, and then it's a back up into maybe a higher portion of the range, but it's more consistent with what that first marker is. I think in our case, it being around that 485 makes perfect sense, because that's also been an anchor point for a large portion of this. You look at that initial move in, you can see that both of these have a lot of strong interactions with that initial move. So this is highly consistent with the concept that this is going to still pump really, really hard to the upside, but it may do it in a very, very short amount of time and then drop in an equally short amount of time. This also kind of spats in the face of what we talked about earlier, because it doesn't necessitate another downside. That's the weird thing about this, is it doesn't really include that last wave down. So in this case, there's no low dip. It's not significantly low anyways. It goes beneath that ice level right here. That would be like our 265 marker, right? That'd be like, at this point, that'd be us dropping again, like 265 to 265. And you guys are like, well, we already did that. I know, but like I said, it's not really there. Like, it's not much of one anyways. So this is kind of a weird situation, because this is so different from the others, but this is one where you have kind of a fake out drop, but then it holds, and then it goes up from there. And that's where I'm like the most like, ugh, that's nasty, because there's not really an easy way to, I can't see much of a difference between that and then what we talked about earlier, which is like the hook. Well, great. So what are we supposed to expect? If I had the answers, I would just tell you. There's very little difference between this and this. It's like the difference is so minor to me, because one of them, it's like, well, it's clearly going backwards farther than it should. Both of them are, rather. But then one is like a hook where it just doesn't advance and it drops. That's really normal. This would be distributive, and then it would go down low. The other would be up to the upside. So when I look at this, do I still think it's going to go up? Yes. How can we make this measurement a reality? If this is just another model of the same thing, how would we use this going forward? I don't want to say everything is like super tricky, super nuanced, but it is a bit tricky because, you know, these situations are all kind of different, and like you have to sort of just take them for what they are. But when you start doing comparisons, it gets complicated because there's a sense in which you don't really know where that middle is, because you need to know where the beginning is and the end are. You have to kind of have that in mind. If you have the beginning and the middle, you can probably find the end, vice versa. But like, I look at this and I'm like, well, which is it? Do you pick the low here? Do you pick the initial sell off? I don't know. They're different, right? They're not the same. The other question might be, is there a creek cross in the middle? Maybe that indicates where the center is. We can find it. So we should try to do it. Let me just do it, because I think this could give us another big piece of information. So I'm going to try to do it. So we already, in this case, is retrospective. We don't have to guess. We know where the beginning and the end are. So we're not going to guess about where they are. Instead, what we're going to do is choose to use the first dip. I'm going to snap these. And we're going to assume that the first dip, which is the selling climax before that little drop, which is like a spring, that's correct. That the goal was to do a bigger 618 retrace and to come back to this level and check it, because it was never tested. I'm sure if we flip the chart upside down, it looks like a logical test because it wasn't checked at any point in the past. It does look like that initial, like, kind of middle of the S-curve level that we've looked at before. All right, so where is the center? The center is here. This is a weird marker. That's the middle. All right, so what do we have as evidence that that's the middle? Now we have to kind of look at it a little bit more objectively in terms of like, well, what would have given that away? Not much, because this doesn't really give it away. It is a creek jump, which is nice. So there's a slight possibility that could have helped. So after the final drop here, where's the creek jump? That kind of business. That's helpful. Maybe even more so using that first wick, which I've been using more often. I think it's even better. Yeah, it's a little better, but that's not quite right. It's a little off. What else do we have? Well, there's another one that's a little bit more outside. I don't think this one's particularly better, though. It actually looks like neither of them hits perfectly. So far, not so good. So far, we haven't really had a strong, perfect center. But that might be the closest thing we've got. And then we can look at the upside and see if there was an obvious trend here. We need to use a different color. Maybe there's interactions with it right there, but that's it. Also not very helpful. So Had we used this as the center where it crosses up and over, it would have given us this low. I mean, that's the same marker. So it's pretty close. So we might be able to do that. It's close enough. Hey, BADRM. I don't know if you watched the beginning of the video, but I made 400% and 290% on SPY. I made 200% on FANG. And I made over 100% on Starbucks this morning. So, and I also talked about Tesla and some others. I entertain all kinds of different plays on here. And I've been talking about Palantir and some others. Like, I made huge amounts of money this morning playing other things. But I also don't have the bandwidth to cover every stock in the market. I have to pick and choose. So there's things that I'll cover and I'll cover more briefly. And then there's things that I'm going to spend a little more time on. And yes, we know that AMC and GME are not running right this second, but I don't want to miss an opportunity and a window for entry. The fact that these other guys already ran is great. I'm happy that I made a bunch of money this morning on these other plays. That's great. I'm very happy about it. But it doesn't do us any good to sit there and talk about them when there's a probability that they're with these big gaps and that the fact that the overhead is not very high. A stock that's already run, that's almost done with its run, is probably going to back up pretty soon. Like, I think SPY is near the local top that I was expecting. And I talked about this pretty extensively last week, that I traded out here and then bought back in. I'm one of the, I've been, I've lost people over the last few years because I don't talk about just AMC and GME. Like, I've done nothing but lose subscribers, especially views, when I don't talk about AMC and GME. So I don't really need to be lectured on, and I don't think it was lecturing me, but I don't really need to be lectured on, you need to cover other things. I cover a lot of stuff on here. Like, I could list out the tickers that we've gone over this last couple weeks. I'm focusing my attention on AMC right now because I'm choosing to focus my attention on it. The fact that it hasn't run yet is a good thing if you want to catch a run. I know, Finger, whatever you guys have been saying about Finger, but you mentioned it a few times. I haven't charted it, and therefore I haven't played it. But that's me, right? Like, that's on me. The fear of missing out's always there. Every time we look away from a ticker, another ticker runs, right? Like, there's not just one. There's thousands and thousands of tickers in the market. So, like, naturally, there's always going to be something that's running. That's fine. If you guys are in those plays, then that's really good. I'm not a chaser kind of stock trader, though. Like, I just don't chase stuff. I want to see a pullback that I can enter into. So, like, I trade a little more contrarian. I like to see red that gives me a good entry. I don't like to chase stuff that's already up 20%, 30%. Like, I just don't, I'm not comfortable trading that way. I don't ever trade that way, almost ever. I've been burned too many times by, supposed momentum plays that do not, and I just don't like them. I don't know how to trade them efficiently. I just don't like them. So if you're a momentum trader and you want to chase stuff that's up 20% and running, I've already told you guys my thoughts about it. Is like, usually I try to find a target for you. Once I find that target, I say, all right, you're going to watch RSI, you're going to watch MACD. When it gets in a certain percentage, you may want to consider taking profits. Is your choice, but I would just do a trailing stop and just ride it out and then let it be what it is. I don't have any entry points when there's no unless it pulls back, right? Unless there's a pullback. You're just chasing it. Yeah, but what I'm demonstrating here is more about so like I understand what you're saying, which is that they have greater volatility, so they're easier to trade. And that's why I was saying like I didn't shy away from trading the broader market, like the S&P 500. I've made more money on that than I have on AMC by far this year. But I also would say that this is not something that like I take it as like this is happening, and the fact that AMC is delayed does not bother me. The same thing happened almost every single time AMC runs up. I'm trying to make that point. If you ignored, let me put it this way. If you chose to ignore AMC when it was coming down from September 2020 through January 2021, you probably would have felt very smart for most of that time, because you would have been making money on something like the S&P 500 or whatever. And the Jim Cramers of the world are going to look at this and say, it's going down, we don't like it. We don't like stocks that are going down, so just sell it. Okay. But like I said, I'm a contrarian trader in some ways. It's appealing to me when there's an opportunity that might turn if the setup looks good behind the scenes. The technical side of it is looking at the nuts and bolts and looking at the gears of it and saying, is this something that's actually doing something different than just going down? Sometimes we look at charts, and we do this often. We'll look at a chart and it's just going down. So there's not much to talk about. Sometimes it's like, no, all the indicators are still like really just playing down. Sometimes we look at it and it's like, well, there's something going on behind the scenes here. It looks like it's going down, but it's really changing direction. That's the kind of play I like to play. This is a great example of that, with a divergence here and ultimately like a massive spring. It's like, it would have been easy to look at AMC back here and say, this is garbage. It's literally going the opposite direction of GameStop. It's going the opposite direction of IWM. It's going the opposite direction of the small caps and the large caps. And then it has a 2,000% or whatever historic run over 6 months, and then it's crap again. So the interesting thing about it is that when the market has delayed this price action, the same thing happened back here. Go back and look at the small caps and the large caps going through April into May. They're already up. It's the same concept. It's like the exact same thing. They were already like moving out here. Even GameStop was already up here, like breaking out. It's the exact same kind of setup. This was identical. AMC's not moving. AMC's garbage. AMC doesn't like to move. You could have been saying that all the way through May 10th after that earnings. And then all of a sudden, it's like way up there. And everyone says, no way. It ran like 200% in 2 days. Nobody could have called that out. Yet I did, because I'm watching it when it's boring. Because AMC likes to run when it's boring and when it doesn't look like it's going to do anything. It's precisely when it does run. Like, it's the best runs that AMC ever has are when it's looking like garbage and everything else is running. So again, like, I'm not saying like we have to spend all of our time on it. I'm not. I'm being genuinely serious when I say I made like 400% on the S&P 500. And I told you guys I was buying in, and I held that position right here. And I made this diagram because I believed in it. I did not miss out on anything. I'm not worried about missing out on a play that you're making money on. Like, it's great that you're making money on it. But that doesn't mean that I can't look at AMC and GME. I understand that the market is bigger than that. I do. And I trade it. CISO is another example of one that we were talking about, And I said that you would watch it and see if it broke out anywhere. It did break out. So it ended up making a higher push here. It dropped back down and consolidated. It did not go back below the creek. So you see how it didn't go back below the creek? It held Friday. I didn't watch it through Friday. Now it's up again. So the idea was that this would generate like a second top. If it's a top on weakness, you'd have to be cautious because it may crap out. But it didn't. It held up. So it held the creek. It went above. That's that. Do I still think this looks good or bad? I mean, it's on the hourly chart here. It broke out. It didn't go back down yet. This is kind of a wedge. It's not a really great one, but it's kind of a wedge. I think we probably just look at wedge targets and just see where it's at. So I'm not always right either, you know. The 382 is up here at like, that's 38% move. That's a 170. It's got a pretty massive like hook zone right here, which we were cautioning about. That's why I wasn't sure if it was going to make another push up, because I said this should be a resistance zone right here, and it is. You're overbought. You're still moving up. There's a lot more volume in this move, but again, like aside from a squeeze play, I still think I can't chase this one if you're not in it already. It's just the way I feel about it. It's a squeeze is a squeeze. It might just keep going. But this is an example of one that like I just didn't feel like I got the entry. It broke out when it should have broken out. It didn't make any kind of pullbacks. Doing the same thing here. It just keeps running up. But, I mean, look at it. It's overbought. It's still overbought. It could be bullish, but it just hit a top resistance right here. It seems very likely. Like the most likely thing to happen is that it would come back down. I said that already. But it didn't break through. It held this line and it pushed up. So same thing. It's now kind of an S-curve. I think that you're looking at the outside here as like a hook. It's done it twice. So it already did it once on this very steep incline. So now it's doing it again. So it's widening out. That's a widening spread. If you want bad RM, I think that you have to, again, consider that not everything that glitters is gold. And sometimes if it looks like garbage, it's not garbage. That doesn't mean that because it's garbage, it's good. Like there's a difference. Like sometimes a turd is just a turd, right? Like you're right that AMC might be just garbage. What I'm saying is that there's a huge amount of data and information that suggests to me that it's not just garbage. So anywho, here's what I would do about this, Jason. I would just draw this marker and then I would wait. And if it broke down that marker, I'd be out. If I were already in it and I was making money, I might take some profit. But this is the top motion right here. So if it breaks this, it doesn't mean it has to come crashing down. Sometimes what this does is it's just like a formation of a bigger top. You know, this could end up being really long-winded and it could still go up. But I would be like ready to be done if it came back through here. Again, based on this setup, it's just ready to go back. I mean, this happened before right here. There was a 1, 2, 3. I mean, actually, 1, 2, 3, and then a big 4. And all of those tops kind of start turning down on this 1 hour. And then it has a bigger pullback. It's going to be here. It's just a matter of when. And it's going to do some kind of a pullback because it's not going to just sit there on this top especially. What may make the most sense right now is to just retest, since it's here, maybe come back and retest this zone. That seems right. Or at least the 50% of this zone, which would be right here, the previous top. Really, the way I drew it kind of makes the most sense to me, but that's the way I would see it. It doesn't mean it's going to come right back down right now. And it could extend a little farther even. It depends if they want to push over this peak. I don't know. It's fitting into the design we have. It's just not exactly what we thought. I thought it might back up first and then go instead of just go. But now you're in this range. So, and the RSI looks divergent and it's kind of a question mark. Is it going to keep squeezing? So again, maybe set a trailing stop, leave it at that. Yeah, no worries. AMC's flatline for 2 years. Looks like a dead body on operating table. Mm-hmm. And it doesn't bother me though. Some of y'all forget that it was like pretty much nothing but distribution and downside until the 2021 move. There wasn't any upward momentum really. For like 4 years, 4 or 5 years, it went like down. It was 2016, right? So 5 years it was basically just downside, turning around at the bottom. We're doing that now. We started 3 years of down and then a year of kind of flat. I'm really less concerned about that. Like, to me, that's totally normal for something like this. But I guess to some people, I actually think I'm kind of in the middle. Like, I think there's some people that are way too bullish about it. And there's some people who are way too bearish about it. I'm kind of in the middle. I've already talked to you guys about the chart shift and what I think is going to happen. I don't necessarily think it comes over 50 to 60 anymore. I think we'd be very fortunate to get up to 45 based on the chart shift. But in previous times, that wasn't $45. That was like $10 or like $15, $20. The idea of this being in a range between $10 to $20 is not unreasonable. So we're really just talking about an overcorrection right now. Well, just because it goes down doesn't mean it's going to come up, Booksy. No, but that's also just a way of not doing any work. Like, it's easy just to discredit somebody by saying, well, it's just not going to do that. Well, okay. I mean, if you don't step in and do the work, naturally, you're going to just conclude that it's garbage because it's just going down. It's in a downtrend. Well, I just said as much about the Jim Cramer kind of effect. If the stock's going down, it's going down. Has AMC been going down for 3 years plus? Yeah, on the whole. And I don't think anyone could argue about that, you know. But at the same time, it's like there's pretty massive checks that, you know, in my opinion, haven't been made on the grand scheme of things. So I'm not really that concerned about it coming back up again. It's like the only people that would say it never comes back up is people who say that the behavior is somehow changed from where it was in 2020, 2021. And it has changed. But it also hasn't changed so much that it's not applicable. Like, the fact of the matter to me is that there's a... Gosh almighty, people. I mean, it's even like right here. It's like this flow of distribution where it drops down and then it comes up again. And then it spends time in a downward motion. I mean, it's literally the same thing we talk about all the time. It's almost boring, you know, like how simple AMC is at times. is it does this thing where it like goes into distribution, and then it comes back up and it hooks. And it's like, this is the exact same pattern every single time. This is the exact same thing we talk about like all the time. It's all over the place on this chart. Why? Because it's the way that the operators chart, it's the way that they are trading it. It's the wave formation right here. It's that simple. So if there's a macro wave formation that looks exactly like this, why in the world would I just capitulate and say, well, you must be right because it just keeps going down? Well, yeah, if it's in the bottom, it's going to feel like that because it hasn't made that upward motion yet. But that's exactly, it's like, I don't want to say you are here. I hate that stuff. But it's like, if you're here in this bottom motion telling me that the stock looks bad, I can't disagree with you that it has had this downward motion. Like, of course it hasn't. But when are you going to buy? If you're going to buy, are you going to buy when it comes up to here? After it's run up? Like, that doesn't make any sense to me. Trading by default is risk taking. I mean, you have to be willing to say, I think it's going to do something. And you can minimize risk by maybe saying, like, I don't know, trade it long term. Like, don't buy here expecting it to go up $50 overnight. Instead, you look at where is the realistic number. I've said it so many times. It's frustrating for people because I know that it's so long. I've said February 2026 for the last like year and a half. It is a long pattern. It is not short. It's not a short-term pattern. And that is extremely important to understand when you look at this chart, that the big picture is a model of exactly what we've experienced elsewhere in AMC, but it is a long-term wave pattern. Like, this is identical to what I just showed you on a small picture, which is still distributive. This is still downside, but on a macro level, where does that downside take you? It's not complicated. It's very simple. The problem is that the chart shift happened. That's the only real issue we have here, is like there was a chart shift. Like, that's it. It would normally have been like back up to here. This is the wave. Well, that's too bullish. No, it's not. It could still be bearish. No, that's never going to happen. It is the model of AMC to do such things. These deep retracements are embedded into the core behavior of this chart. You start with a weakness, then you drive the price up, you drive it low, and you buy back up, and you go back and you recheck those levels a secondary time. That's distribution 101 with the UTAD, and on AMC it does the same thing on like every time frame all the time. It's like constant, non-stop repetition. So I don't understand the sentiment that it's been down, it's never going to move, when it's literally iterating the same thing on a smaller picture here with high elevated volume. I'm like, this is exactly the time on a macro scale that you would want to be in long term for a potential ride back up to these elevated levels. I've been making the same point for the last 10, 12, 15, 16 months now. I mean, I feel like it's been forever. Normally, the goal would be to come back and retest one of these bottoms here. Like, this would be the liquidity goal. I think because of the chart shift, that goal has been moved quite low. And it's between 30 and 45. And I've already talked about why I think that is. That's doing the work. If you just look at the chart and tell me this garbage and you don't understand why I'm charting it because it's trash, I can't interact with you. Like, all I can say is, okay, that's one way to look at it. Let's just not do anything then. Let's just pretend like it's a dead chart and move on with our lives. That's fine. You can do that. I don't think you should hold on to hope forever. And if that's not you, then don't do it. If you think this is like hopium or something, I don't. I think it's just a pattern. And I think that the pattern is not done yet. And that the fact that I'm not calling out a squeeze like forever and ever, and that in January last year, I thought it was going to go from 14 to 250 in that range, and it's been in 14 to 250. It's like, that makes sense to me. That's where it should be right now. The idea of it being higher necessitates a finishing of this range. The finishing of this range, in my mind, necessitates a spring action of pumping and then dumping, going to 4 and then back down. These are not abstract concepts that don't tie into the bigger picture. They do. If you drive the price to 4 on a local time frame, you're accomplishing something so that you can drive the price even lower before a massive push to the upside to leave this range behind where you've done a massive amount of accumulation. I don't see how anybody would look at this and then go back here and see this as like a largely different type of bottom. Look at the volume that was bought in on this bottom when the price looked like it was trash, and what happened as a result. So look at this right here. Look at the on-balance volume in addition to this. Look at this drive down into this portion right here. Where is all the volume at? Where is all the trading happening? Way down low. This was back in like the $2 to $8 range or something, or $7 range at the time. Okay, where is all the volume now since this, drop? Yeah, you're just kind of missing the point, Chuck. I'm not fighting against Wall Street. I'm like watching what they're doing. We just disagree because you think that they're not going to let it go. But I think that they're purposely making people like you and me despair so that they can get ready to go. Look at that and tell me what would happen next. How do stocks go to all-time lows? No one paid that much for the stock. It doesn't make sense how that works. We got a lot of other big picture problems then. That's market 101 kind of stuff. You need to research the bid and the ask. It's not about what people paid past tense. It's about what people are willing to pay to buy shares, and then what people want out of that when they sell. Buying and holding a stock does not cause the stock to move. That is a myth. That is not true. What it does do is if you hold that stock and you do not allow your shares to be sold, you do not add selling pressure, and when the shares that are bought back, right, by shorts, it creates a squeeze motion because there is not a lot of shares to buy back. If people aren't selling, they have to rely on shorts that cover a position, have to buy back the shares. They have to buy because they sold a share short that they don't actually usually have, right? That's how it works. But it's the idea that they sold it. They already did the selling. In order for them to cover that position, they have to buy back their shares. The whole reason that this whole hodl motion, buy and hold motion took place that people were talking about is that if you hold on, it's true, if you hold on to those shares and you do not sell them, then the sellers do not have the ability to buy back their shares. That does not mean that they cannot continue to drive the price movement around, because you still have active buyers and sellers. Even if there's let's say there's a huge amount of the float that's locked up in people that are just holding on to it. Okay, that's fine. But if you get enough people involved in addition to that who can buy and sell, then you can still move the chart around. You can move this chart around with no volume. if the bid and the ask are driving the price around, which you can do. It's supply and demand. So how do they go to all-time lows? There's not enough demand to keep it going up. So the price continues to drop level to level. And I would argue that some of that is built into arbitration and things like that. Some of it's built into just derivatives and, the game that Wall Street plays. Sure, a lot of it is. Some of it, you could look at it as like a predestined kind of thing in terms of levels that are already being checked. Because back here, there were liquidity tests being done about like, hey, we want to go to these lows again in the future. We'll take it up and then start a massive sell down. And that's what happened. And from a market cap standpoint, that's exactly where it is right now. It's like checking out the bottom of those lows. Once it gets back above there, it's going to run. The fact that these levels are where they are does not surprise me at all. Based on what we know about how AMC trades. If you don't want to do that work and look at what a distribution is and what it is they're trying to accomplish when they drive the price high in order to go low and vice versa, low in order to go high, I can't really, that's a whole nother day that's like a solid day of just talking about it. You shouldn't be trading the market, in my opinion, if you do not understand what drives the market up and down. If a company dilutes, there's no pressure. I would say that dilution, if the flow is locked up, then what dilution can do is it can generate more liquidity. And it's a myth that dilution does not help liquidity. There's this idea that you have to keep the float locked up so that there's pressure. The problem is if nobody's buying, that's really what causes stagnation in terms of the price action. So unless you continue to buy constantly, then it's not going to matter, right? By adding more shares, you're giving more real shares into the market. You're going to increase the liquidity of it, especially if half your float or more is locked up with people who aren't trading it. They're just holding on to it. So there's a kind of a double whammy there. I think most people look at the one side, they don't look at the other side, which is the need for liquidity. If you don't have liquidity in a stock, it can't really easily move it anywhere, let alone up. So you need to have shares available to trade, new shares available to trade. There's not really a rule that says dilution always ends badly. It's commonly associated with downside because of the idea of diluting the value, but that's not quite the case if you think about it long term. If a stock is valued, I know what you're thinking because it's the idea that the market cap is not flexible. If the market cap is fixed, then it's just a fixed part of the formula. Then the dilution necessarily decreases the value because you're having a larger multiple. You're dividing, from that market cap value. But if the market cap value is flexible, then the increase in liquidity, if the ultimate goal is not to just keep it down forever, but to grow it, then actually that dilution can actually help, which historically is the case if the company is valuable. That's where you get into a fundamental argument, is that it actually can improve the overall market cap over time, which makes sense to me. But it has to be valuable enough. It allows the ceiling to be raised, essentially, as opposed to being kind of stuck. So the short squeeze mentality of dilution is bad. It really depends on one model of price action. And if that's the only model of price action that you have, then yeah, dilution being kind of bad is true. But if you look at every other kind of way of price, exploration and liquidity, dilution isn't by itself an evil thing. It really depends on what it does for the company and what it does for the market cap, whether that increases their ability to make profits, increases their or decreases their debt over time. That actually is a good thing. And so you're injecting liquidity into the market, you're giving more real shares available to trade, and then you're also improving your balance sheet at the same time. Temporarily, yeah, because the market cap is at a fixed point in space, it's going to decrease the value. But it's like, I don't know, it's like adding extra cylinders to your car or something. You know what I mean? It's like, yeah, like it might at first, I mean, that's not the greatest example, guzzle more gas or something. I don't know. That's a bad example. Like it costs you more, but it's going to be, if it's appropriate, it's going to be good. But that comes down to a fundamental, it gives you an increase in speed. I don't know. That was a bad example. I was trying to think of a better example. But I don't agree with the idea that it's necessarily an evil thing all the time. And I actually think that the reason that they're doing it where they're doing it is a little bit odd. But I think the reason they did it where they did it is because that's actually where the floor was. And I just made that point a minute ago. Like, if you look at where that is, that's the same place that diluted in 2020, if you use the shift chart. The volume here is astronomically high, even compared to where it was at the peak of the runs. So this is not one-sided, y'all. Like, there's a huge amount of buying pressure that's happened here. I really don't think this is as bad as everyone says it is, as some people say it is. I think it's actually quite the opposite. But I can't convince you if I've not already done that over the last 2 years. I mean, there's nothing else I'm going to say that's going to like magically change your mind about it. It's complicated, the idea of dilution, because it just depends on the company. It really does. They're not all the same. And if you look at all the companies that dilute, they're kind of a mixed bag. Some of them, it ends up being very, very good for them. Very good for them. And in others, it's like a sign of desperation, And then even others still, it's just like temporary relief. Temporarily gives us enough ammunition to do something big, and then it's done, right? So I'm not sure what that means for AMC, but I think it's reasonable to say that for AMC, it probably is that latter one where it's like temporarily gives you enough ammunition to do something that you've been trying to do or you want to do. And who knows, maybe that's part of the operator's game, is to force that hand. Like they knew this would happen if they brought it down low, and that they've probably figured it out with the ape thing. I think that the shift was already in play. I've talked about that before. The numbers don't add up unless you start looking at that shift value that occurs. Then it makes perfect sense why it was pushed around the way it was at $3 and $4 at that time. But anywho, we need to look really quick at this and see if we can determine. So I'm not saying that this drops off a cliff. It's important to note that what we're looking at is just an example of a potential like setup where it drops low. We could look at 2020 and probably find the exact same thing. In fact, I'm 100% positive we could if you really want to instead of that, because it doesn't matter. Like, it's the same setup. It's just slightly different in terms of like the way it's approached. But this is essentially, I mean, you could do the same thing here, is what I'm trying to say. And I don't think that using that one is necessarily means it's going to dump off the face of the earth. That was a very unique time where there's a huge shift that's happening because of a reverse split and ape and all that jazz. I'm just using it as an example. This is a similar setup right here. Although I probably need to adjust. the angle. Yeah, I'd have to find it. This one's not going to be just a gimme. I mean, it's pretty close. That's pretty close. This one's a little bit different, but it's the same concept, right? So you could do it this way where you have like the macro curve. We've done that way before, where you use like a really extreme angle here and you can find it very quickly. Like this guy, for example, really easily can find the big one, right? But there's also a smaller one which is built upon these triple peaks, which is very similar to the 1, 2, 3 peaks that we're looking at right now and the 3 peaks that we just saw in the other model. I hope you guys can at least to some degree see that, because it's important to note that these are like similarly built functionally anyways. They're similar, right? 1, 2, 3, 1, 2, 3, right? 1, 2, 3. We talked about it a minute ago. And then even here, looking back, 1, 2, 3, right? There's like a triple peak in the beginning of the range after the sell down. Then you kind of have a secondary action and a final up thrust action before a drop. It's the same thing we're seeing. We just don't have that final up thrust action. This is very similar. There's a 1, 2, 3 secondary action, final up thrust, then a drop. All of that's consistent with what we've already talked about. So we'd be looking at this in terms of a pattern. And I think it's a bit challenging because these are, again, these S curves are kind of, I wouldn't say arbitrary, but they're a bit subjective. I mean, if I took this and I didn't know exactly where to look already, it'd be hard for me to kind of determine. One thing that's consistent, at least in the first two models, is that there seems to be, a drive through this top that comes back to it, and it's relating to an earlier dip. One thing that would be challenging with the 2020 model is there's no early dip. Like the only thing we have is this, and neither of those, it doesn't come back to them. So that's a bit of a challenge. It's also possible, maybe because of the angle, that we may not be able to kind of perfectly identify it. I would suggest that in this case, again, keep it simple is usually the best thing. And just, again, where is the other thing? It's not just about the horizontal level, it's also about that creek. And ultimately, this is going to reject on it before it actually advances it. This is the same way. It rejects on that major creek coming down, right? It doesn't end up advancing, it just dies. But we get the point, you know? So is there a similarity here? Sure. Is it 1-to-1? No, maybe not. But I think we could take maybe a picture of this as another alternative, to visually what we're seeing. I'm trying to explain that they're all kind of the same, but I get that this is maybe a bit difficult when you look at the end result, because you're like, no, I don't think it's the same thing. I'm making a case that this backup needs to happen. And we've already sort of talked about why multiple times, so I don't want to go like too crazy. Volume is super low, dude. What do you mean? Not on balance volume. On balance volume is as high as it's ever been. It's higher than it arguably, it's been as high, if not higher than where it was. And we're looking at the trading volume. It's extremely high. Talking about on balance, and then also just active trading volume. It's extremely high. Like during this entire downtrend, this is definitely the most volume we've seen. I mean, you look at the VRVP comparison. Oh, sorry, wrong one. It's not even close. Look at that. It's eclipsing like all of the volume that preceded it. $10 million volume daily. Well, yeah, right now. So, again, look at it locally, and it's a little different. if you take that into consideration, like, well, locally, this is very flat. That makes sense to me. That this would be like nothing volume. But I'm not talking about small picture there. I'm talking about like big picture. This is a huge influx of new traders in AMC. I was making a comparison between that and 2020, which had the same effect. So, but yeah, I mean, of course, right this second, is the volume really low? Yeah, super low. That usually means something's about to happen. And I'm arguing that I think it's a big upthrust to 4 and then a drop back down to 180s. And then a big spring. I'm kind of confused as to if there is any controversy. Like, what's the controversy about that assessment? I'm actually saying that I think it's going to go down again, but it's missing like a spring motion that it needs to be making. There's a lot of people out there that don't agree with that. They think it's just going to go down here and then go, like it's done. It's just a giant double bottom / spring. But I'm saying that I think based on liquidity and the way that we've seen AMC trade in the past, that what more likely happens is that we do get an upthrust here, but then it drives the price low. And I think the model for that is very clear, which is an iterative model. It's going to do the same thing it's already done, but right here, essentially. Not this particular one where it dumps to new lows like crazy far, but they're all the same. Like, that's what I'm trying to say. It almost doesn't matter. You drive the price up before you come back down. So even if I were being like hyper conservative about this, I'd probably still suggest it comes back to 409. What I was trying to do, and I just went on a complete sidewinder, is that I was trying to determine how I could better draw the S-curve, because I think that there's a way through it and you can draw it. So after the triple top, the 1, 2, 3, the RSI is essentially identical here as it is in 2020, which is kind of nice. This is basically looking exactly the same. There's a drop, and then there's a sort of a cross here. Maybe it began here with the RSI. You can see right there on this double top. And then this is where the middle roughly is on the S-curve. So in trying to determine where that is, I'm going to look back. And it looks like it's there. It's the same thing, guys. It's the same setup, waveform-wise. Doesn't mean it has to be like hyper bearish, but we're right in some ways. It's the same thing. And then this has a big pump in the middle. It checks the midline. It checks the creek. It does all the right things. This is all kind of neat and orderly, which is nice. This is just a comparison I've not done before. That's why I'm doing it, okay? And I want to make sure if I do it, that I do it right. So that looks correct. This is all like in the right spot. And then it builds out. It does make a lower low here and check that creek one more time right there. I think we see the same thing right here. It's a little bit wonky, but it did come back down. So that was April 4th compared to like June. That was the low. So that's that low hit right here, the low hit right here. The only thing I don't like is just, I guess, just the way it's set up, but like from there, but it's basically there. I guess you could argue that maybe you're making it too small because you're looking at this tiny area as a comparison instead of the big. Because in the big area, this bought up, pushes out, and then just builds back out and blows up, doesn't it? If you look at the RSI, you can see the build out right here, that last dip, and then the rip. I'm just trying to identify where that thing terminates. Like, where does it actually end? So this bottom would be like this bottom here. There's the buy-in. And then this would not be, excuse me, I'm sorry. This would be disconnected. It looks like timing is just the problem here. If that's the case, then this is actually more likely where we are. which is a bit challenging to wrap my head around, but let's get rid of this stuff. Excuse me, sorry for coughing into the microphone. I know it really blows up people's eardrums, but I didn't do it on purpose. It was a cough. Came out of nowhere. So this particular build out, very similar. Walk down. See, I was thinking like earlier that this build out went farther. It's a little different. There's some similarities. Maybe it's just taking longer than expected. So when I did the timing on this and I built from third to the middle to the end, I did the same thing here. Third one to the middle to the end. It looked like it should be done. Like it looked like this portion right here, and it's about to explode. But for whatever reason, when I look at it up close, it does not look like it's done. It's missing something. And you know what? I think it's missing this little guy right here. I'm not a huge, like, everything has to be symmetrical person. It doesn't always have to be symmetrical. But if you look at the RSI on the, let me get rid of that one. If you look at the RSI right here, there's a little M cross that happened going down into this bigger one. That to me, again, iteration wise makes sense. And it doesn't seem like it did that right here, which is kind of odd. So you can see like this low zone is what I'm talking about. If you look at the low zone here, this is why I was concerned, because we didn't make that dip. This kind of goes back to the same thing. It's like it did one of them. One of the M's is right here, but then there's no other one. It just went up. It's like it's missing an M cross right here. It just doesn't have it. What might happen is this builds up high and then drops. And as soon as it dips below, I bet you this happens. As soon as it dips below that moving average, then it just rips from like just sub 50 on RSI on the 4 hour. This would make sense as to why it looks so different. But again, that doesn't really tell us where it goes. So it's still like the same problem. It could go low. So there are some differences here. So back in this time period, we're still really close, guys. Back in this time period, this went below. It advanced, it tried to advance over the creek a few times, kind of pushes it out, and then it drops below right here. This is like that 265 zone. It drops right into that 265 zone, but it was below this ice level, which is like this rising trend. It actually looked like it lost it. It looked like it hooked too. It's really ugly. Because it would have looked distributive to some degree for some folks. So looking at that, I've been like, I don't know. It closed like right above it. Never mind. Take it back. So it was like barely over it though. So if we were doing like a 1-to-1 and we thought that that was what happened, we would say this comes back below. It's not going to work. It's not going to work as a 1-to-1. But we would say it comes back below. Man, I don't even know. Maybe back below here, and then by Monday, it's like at 260. Something like that would be reasonable. That's the comparable move. And then Monday the 19th, it would be off to the races, like way up high. Then it would hit $4. This is kind of what I already drew, so I'm not going to stress about it too much, but all right, well, that's the comparable exchange there. That's assuming it doesn't go low. I think if it goes really low, it's actually not a big deal, because there's another wave right here, and this one's very different. It's super flat. It's hard to even see any kind of real backup. think there is a backup right there, though. It's just, again, a bit challenging maybe to see it. So one thing would be to sort of think about that, I guess, as dynamically as possible and think about where that backup might be. So if that's the bottom, we think it might be, then the backup, yeah, it should come back right to there. All that's in the right spot. So it needs to come down one more time. It's just missing that. Here's what I thought last week. This is what frustrated me. Is like I wanted to see it come back down last week and like come low to 260, and it just didn't. I would have been a lot more comfortable with that and then a breakout, because then we would have just been like, all right, it's going, right? But instead we came up high, which is odd. And then we're dropping down low again, and you're like, well, great. But this actually looks right. It looks like it's just missing it, but it elevated it instead. And this does the same thing. It drops down just below to like 45 on the 4 hour. It's really similar. All right, so if that happens, then we think maybe it's the 19th, which I think we had already kind of mentioned that might be a possibility. So we're going to ignore this for now. I'm annoyed that it's not now, but that's okay. So if it's the 19th, we only have two possibilities. So one is, it could be June 6th, but one is, that's really soon, isn't it? Well, one's like 470s, maybe 485. We did talk about 485. That was one possibility. I still think that's a possibility. So I'm going to keep it on the chart. All right, whatever. You don't want to give me 485. I don't care. The other possibility is 4 or 415. And really, that 415 is a 0.5 fib. So we'll use the 415 instead of 403, which is the first number we got. So let's say, for example, that we're right. It does work out. It's going to go on Monday. We have to just assume that for a minute just to see if we can do this. So this is a possible S-curve, and then this is a possible S-curve. It almost doesn't make any difference. So let's just do the higher one. Actually, that looks right. This guy builds out. They're almost going to be the same. And that's the annoying part of this, is like it would be nearly impossible to figure out which one's the right one. This one's pretty close, though. So we're going to do this. So then the middle, let's see if we got it right. The middle is, right here. Actually, that's pretty dang close, guys. What do you mean? Remember, the middle is, it won't matter which one it is, because it's not in the right spot horizontally, or excuse me, vertically. We won't be able to determine it because it's stretched so far, it doesn't even cover the same area, really. Like, you can see the middle correlates to this. This could be a 50% at 345 back here from last May. That works, and then it gives you a pretty clean middle as an S-curve. But you can't use the middle for much else here. That 345, just that 340 to 330, that seems right because that's where this is too. So let me do a little bar here so you can see better what I'm talking about. That's the center right there if it goes up to 345. That looks pretty darn good because that's right where this was iterating. I wouldn't say iterating. That's right where this was chopping around. Seems correct. And then this would be the motion up then, here. Ha! It's right there. No, it's not, Booksy. Yes, it is. It's still there. They used that. They created a trajectory marker right there. They use it as a breakdown. There's always going to be like a hook involved. It's there. And then on RSI, that actually goes backwards to here. And that's where the high is. It's like right there. So it hits that top. It's a perfect wave intersection. 1, 2, 3, right there. 1, 2, and then 3 again. I was right on the dot. It's just a little off from what we were expecting because they didn't go into the motion early, which is stinky. I got a big decision to make because I made some money this week. Do I risk it? I need to be careful. I need to at least put half of it back. All right, so what I was saying is this is actually really consistent because what we found on this one was at the middle, even though it's not like perfect. What the heck is that sound? It's like somebody extremely consistent because look, where's the creek jump happen after the first one? Just look at it. It's right there. Like it's in the right perfect spot. And there's the second push. There's the third right there. That's on the RSI anyways. It's everything's where it should be. We're done. We're doomed. Maybe not, guys. Maybe this is actually where it was trying to go. Because it ends up working out that this drops down really low. I think the confusing thing is the chart shift on this in this case, but that is actually a pretty good wave. And they may have already known that they were going to do that, so it's a complicated one for sure. Like they may have known that they were going to convert the ape and have this shift. We don't know. That's impossible to know. But it is pretty darn close to where it goes later in the future when it dives. That's a good sign because we actually have a similar motion here. So let's do this. Let's see if we can make it work because that looks really similar to me. And I'm a big fan of easy to read wave crosses. And that's a really easy to read one. I just haven't really considered it very much. It's waiting. Yeah, dude, that's it, man. Look, it's right after that jump. But which marker is it? So that's still the question in my brain. I think it's this one. I don't think it's the higher one. But I still think this is the right one. I know it has other stuff that goes through it. But I guess we could use both. They both look parallel when you do that, don't they? This looks like a double whammy. Yeah, those are just like parallels. Yep. Okay. Well, that makes it easy too. We just use it as a parallel. There you go. What are you trying to say, Booksy? Oh, look at where we are now. Look at that. What do you know? What? We're sitting right under it? Yeah, we're right on it, man. That's it, man. We're breaking out. We're going to the moon. Well, it's interesting because this is the wave, but it makes sense either way. Because if you went to a distribution, you'd pump here and then drop back down to it, maybe through it, but you'd come back down through that level. And maybe that's where this is coming back to the beginning with this initial trend, right, which developed kind of early on. There was there's a marker right there. There's a weird marker when we went up. I always kind of thought it was odd because there's not a lot of stopping places. It's right there. See that 1, 2, 3? That's pretty clean. And then that actually seems to be the interaction later here on the bottom, October 10th. So there's a lot of wave jumps that happened pretty early. There's a resistance, back up, jump, hold it, back up, hold it, so on and so forth. And that actually looks very similar to where it's going to go later Maybe even now. It's really close to the same range. So what does that mean? Well, what I'm saying is that, like, for example, this goes up and it comes back. I'd probably be looking for that dive. And we've gone through this a number of times to 180. But I actually think that in the end, no matter what happens, it's going to be below the floor. It could be as simple as that. You'd probably end up here, though. This would be like an August exit, which I know is really far off. You guys are like, that's a crap. I know. Well, August 6th is one. July 1st through the 10th is one. And yeah, June. But basically the beginning of every month. But I think that July and August are actually the more likely ones because of the fact that we entered this range in August, like at the get-go. We don't actually need to leave until August 20-something. So there's a huge amount of time between now and then to make this move. That's $2. That's come up quite a bit. It may be $2. Who knows? Anyways, I bet these interact, though, with the end. Kind of like what we're saying right now, but just doing it again after like a flush. This is a massive widening. Check out that widening. Huge widening from 576 down. It's crazy. This would get you down to new lows. So fancy that. And then it looks just like 2020. So it really doesn't make a huge difference whether it's 415 or 485 because it would pretty much be the same thing. And that's, again, this interim kind of break. So what we're trying to do is determine if that's the right exit day. And we think that might be the case because this is breaking above this creek right here. I mean, it does leave on those dates. The only other date I could pick out is maybe this one, since this had like a double flush here and it kind of went backwards. There's a second date on November 11th that comes up as a possibility. That's the only other one I can think of. This is absolutely close. The other one would be that's June 13th. So a longer winded one for sure. I hate to say it, but June 13th actually, or maybe the 16th, that actually looks more like an exact hit on that angle at 485. There were a lot of delay tactics in this area that were used. That's pretty slow. So is that one being targeted as well? That's a good question. This one definitely seemed like it was. And I mean, it looks really solid. I wonder if the other one is too. And there's an open door there that we're not aware of. Maybe not so much. Let's anchor it. It's more like the 27th when it's anchored. It's very early if you use that one. This one, which is really like support and then hook resistance. That changes it quite a bit, quite dynamically. Yeah, they're all kind of crossing the mold in the same spots. So it's between May 5th and May 20th, which makes sense. It's this zone right here. We're really close to this move. But I think that you'd have to consider the possibility that it's farther out just to consider it. I don't think you can just like say, oh, it's definitely going to go here. There's not enough time, or there's plenty of time, rather, I should say, to chop down. So here's my assessment on this, okay? We went through this in order to determine if this seemed like a likely setup. And I think it is. I think RSI, interestingly, is set up to where this is ready to explode again. Price action, it is correlating very neatly to this idea that it's where the initial creek cross is. There's like a doubling value. And after that doubling value, that's really where the middle of that wave is. So I'm not drawing it that way per se right here. I could kind of like squeeze this backwards to try to get it into that center mark a little bit better. But essentially, like, that's the middle value. And it's not quite right, you know. It doesn't give you, like, exactly the right date, which I was mentioning before. It's like, it's roughly the middle. So you could take that to mean, again, this little area right here is kind of roughly the middle, which means that it's roughly between the 19th as a peak and the 17th, which is a huge period of time, I know. But I do think that the earlier one seems more likely because of where the original peak is. So I'm going to stress that I think the 19th is more likely. And I don't think there's any other real evidence beyond that. We would just kind of leave it at that. This comparison would basically be done. And then what we would want to do is kind of take a look at the final build out here as a way of understanding it. And I think what we'd want to do is, again, consider what happened on these jumps. So one was early. So this does come back down to that peak at least once, and then it sort of settled. It does check that creek. There's a backup here. There's an additional creek that's formed. But this should help us a little bit. We have a very similar structure, so there's not really any reason to not do it. So this yellow line, yeah, it's in the right spot. Let's make it yellow on the other chart too. So this yellow line right here is the creek jump, and it backs up to it. You can see we did the jump right here. It's already jumped. So everything's in the right spot for that backup. And yes, we were correct. This does come down to just slightly below, like 260s where that intersection is. Doesn't go below it though, but maybe this is probably a good time to think about what's actually happening here, because there should have been a consolidation slash accumulation in this little zone. It's not as simple as like there's an M cross is what I'm trying to say. So this would have went up, down, up and down again into a spring. And it breaks out here. So the formation is fairly straightforward. There's a auto reaction probably an auto reaction phase B top right here, 1, 2, and then it's a push up before the spring, and then it drives down low, and then it goes. That's similar to what we see everywhere that AMC takes off, including last year around this time. It's the same motion. This is going to look really sloppy, but there's a, it goes down, up, down, up, and then it goes into a similar thing down bottom, although it's hard to see it, and it basically looks like that. It's hard to see it here because it's a 4 hour, but that's basically what it looks like. Pretty straightforward. They look a little different, but they're the same idea, which is that you have eventually, this would have been like a double top right there, 1 back up 2. So this would have done this. So if you look at it from that point of view, it's essentially identical. It's just that the initial portion is like wider. So that's what it looks like. It's the same idea. Because it generates like a bottom after doing a push-up right here. And then it generates like a lower bottom where it builds out and then rockets. And there's usually one final push-up before the drop, one final push-up before the drop. That's locally and applies to what we're talking about big picture. So if we look at it from that point of view, we can kind of determine that that might be missing here. Again, I don't really see it in this motion. And I didn't feel like it was there last week. So you're probably going to have something similar. So this would lose first the... there's 2 lines that we would lose. This one and this one. Like both of those would have to be lost if we drop. So they'll be easy enough to see. And that may seem bad, but it's really like no different than what happened here when this lost this edge right there and it like dropped through. And then it has like a reaction up. May even be similar to that where you get an earlier reaction here. So if this were to drop, and we don't know for sure that it's going to do the same thing. I mean, it's just a question of what looks right. You know, maybe this backup was enough, and they're not going to bother going back down again. It'd be weird, but maybe we're actually like right there, you know, on July 21st, and it's about to just take off. Don't really think it makes a huge difference. But that's just the difference between this Monday and Tuesday versus next Monday and Tuesday. So this Monday, Tuesday, I think it just takes off. If it's next Monday, Tuesday, I think we're going to go back down. Probably end up coming down low here. We may even get like a double up thrust and then drop going into Friday. I don't know, man. There's not a lot of time. I guess it'd be like that. That looks right. So it'd be really flat and boring this week, and then it would just take off on Monday. That would be good to me. This would look convincing to me if I saw that happen. That looks correct. And I bet this would even interact with that top too. Usually these become a kind of triangulation of where you are at a SOS. So you'd put yourself in that pocket, go Monday here in this little zone. Gap up to like 285 or something and then just go. I'm starting to see that it might be just below 265. That's in a situation that it doesn't make a lower low. It's kind of a fake out move. It drives the price low. It may even go below 259. I mean, it could go pretty low. because technically, like, this creek is the marker, and it can hit that twice and maybe make a new low before Monday. So it's hard to say. But you're looking at like between 265 and 260 as the most common targets there. If it manages, for whatever reason, if this flies through that creek at some point, I don't really know how to say it other than I think it should be in the 240s. It's a pretty straightforward marker. So that's different, obviously. The 240s is one that I would say is very strong possibility. If it slides through the 260, 259 area with some serious oomph, I think you're going to just kind of slide really far and probably go all the way to 240. This is a great place, though. I think if it ends up here this week, there's a good chance that it's ready to go and just takes off. And it's going to look like trash, but then it kind of is. I mean, it's an anemic move, but it's a move that's designed to get the buy-in needed on balance volume. So I'm kind of going in circles here, but the on balance volume is really critical for me. So I think there's if this comes down, I would be interested to see what happens here. I bet you this wouldn't even come that low initially. It probably makes a higher low. It may not even shift down much at all. It looks like it's trying to cross back up. And I can't be precise about it. I don't think on balance is that precise, but it may not even go back below this guy right here at like 32 million on balance. I think this is what we're looking at, but it's got to be, it's going to depend purely on like today versus next week. So yeah, I think if it starts chopping down today, we're going to see this might be a little odd, but I would wonder if once it makes that low, if this actually comes back up and stays like really elevated and it looks really different from the price action, I bet you that would be possible here. Like this is going down and this is coming up. No. I mean, yes and no. So like, yes and no in that there was an original target in mind that had this is a likely week, but the S&P 500, AMC is not a part of that. It's part of the small cap, which is IWM. And IWM had a strong chance, like the Russell 2000, right? So it's not considered a large cap company. When AMC ran in 2024, it did so when IWM was already like topping off. It was like 80% up the move. What that tells me in the back of my head is that like in terms of buying and selling, that the broader ETF market was already like starting to round off. Like it was already rounding off. You're already 80% up the move, then you know the smart money's already selling. So they were selling their money when they're selling their, most of the stocks when all of a sudden AMC and GME just rip. So they were like 80% of the way up their move. It's a very, very similar setup. I cannot stress it enough, like how similar this is. It's actually like 1-to-1 almost, which is kind of weird. But it's nearly 1-to-1 with what happened last year, again, which is kind of odd. So we're really looking at this as, in my mind, I'm looking at this as a really similar stage, right? So you have this kind of push up going into May, and this goes all the way into Wednesday, May 15th, which is a very similar time period. It goes up to a peak. AMC moved on that Monday, the 13th. So again, we're like a day off, but ultimately like a day is not that much. We could be a week off. We don't know how long this is going to last. It could keep going. But the point is that by the time this comes down, AMC comes back down on the Friday, by the 17th, right? Think about that in terms of like where this is. This is already up. AMC was like way down low at that time. It hadn't made any moves. It had not advanced. In fact, the broader market had started advancing May 2nd. AMC went down for its final earnings, for the earnings calls, and then for that little spring. All the while, these things are moving over the course of like 2 days, and then 2 days it corrects, right? And you look at where we are presently, this is extremely similar in terms of the nature of it. Actually, I already copied it over here. This is the same thing. This is last year. It looks like a copy from here on, but this is last year. So this is 2024. Like, it's essentially the exact same build out. So we're really experiencing like the tail end here of this top. We kind of built into this squeeze motion right here, which happened again same time last year. That's right in this pocket. That's why I thought it was going to come up again to 207, and it did. But it hasn't reached the actual top yet, because there's a creek here that comes down all the way down to like maybe 210. So there's certainly like time to continue to move. There's time from now until, if you went sideways, till the 28th of May. I mean, so there's a huge amount of space here to there to kind of finish that top motion. So the comparable attitude would be that really any time during that upper period, which is similar to what we saw here when this moved up, although this does hit it, right? It's like the first move was part of it. This goes all the way to like the 22nd or something the next week, right? The following Monday, Tuesday, it's there. This is a little bit bigger. So it goes from Friday to Monday. Actually, that already happened on a Friday, but it goes up here to the 22nd. I mean, it's a little bit more time for sure. It's more than a week. It's almost 2 weeks. It's ready. It's just the question of timing is going to be tricky. It's now within the next day or two, or it's going to be probably on Monday. So I know that things look off. They do. And I am concerned about some of these possibilities of like weak up thrust or hooking here, or all of those things are possible. But there are certainly pieces of this setup that look very, very good. I'm not worried about GME at all. To me, GME looks fine. I mean, it's right where it should be. If it's going to advance here. Yeah, it backed up to this creek jump. That's the big one right here. There's nothing wrong with that. In terms of the S-curve, if it's going to go up, and it could, and probably will, it's right where it needs to be. I mean, it's again, a stone's throw away or about a week away. This is the 19th right here. We did this one last week, so more evidence that it could be about a week off. There's pieces that support both. Yeah, this hooked on that ice level. And then it came back down and it landed on top of this creek here. Timing is the hardest part. But if you're only a week off, that's not too bad. And considering like how most people would have expected this to be kind of 1-to-1 with last year based on the way it was going, if you're off, it's probably just a matter of like screwing over people that thought it was going to be 1-to-1. And that's normal, I think, for an operator to do, to delay a price action. Worst case scenario is it just doesn't go and we get some kind of weird distributive action that's not needing any upside. I don't think that's going to happen. I think the model here is that GME and AMC both go. GME goes up to, they both go to like their January areas. So GME goes up to like 32 region, and then AMC goes to the $4 area right here. They're both set to go back to like January 7th, basically. Maybe a little beyond. And then GME is going to build out like it did in 2021, where it keeps going just over time. If it's going to eventually break out, I think that's what happens. It takes like 2 months or a month and a half to go up towards like July, August. And then while it's doing that, AMC does exactly what it did in 2021. It goes down for its spring. It goes the opposite way. It reverses. Well, this is not really like the same as where we were back here. I mean, just to counter that argument, I don't feel like I've always said it's the next Monday. We have, sometimes you're waiting, in a sideways period. Mondays are typically the higher volume days. So a lot of times it is a Monday move, but that's not always the case. AMC's run on Wednesdays, it's run on Fridays. This is not always the same. Like when you break out here, it's like, all right, make it up to 4. It didn't get there. It got to 376. And people still said that, oh, it wasn't good enough of a call out. And it's like, well, sometimes they're not quite perfect, but they're pretty close. It's up to you to trade it, not my job, I'm just here to provide what information I want to provide, I guess. But this is not always the same. Like these are not setups that always have to break out. And frankly, none of these after this top, almost none of these broke out of much of anything until the big April move right here. So there hasn't been any move right in this area, except for right here where you could have crossed up and over and built higher. We didn't do that. I still contest that was a possibility. It's just not where we wanted to trade. Like, it wouldn't have been a big deal if this had crossed up and over. It still would have come back down and bounced and then come back down again. This is what I had drawn. So I don't think there was ever a time where I said this was just going to take off from here. This is what I had on the chart, and I said if it didn't go on April 28th or that time period, that was a Monday, going into that Friday, that it was not good. Like, it was probably going to head low, below 265, and it did. So there's a problem, right? And it didn't cross up here. But like, even then, I didn't think it was going to take off. I thought it was going to chop and go into a long thing. And I distinctly told everybody I didn't think it was likely going to run on earnings. It was more likely it was going to take the rest of the week off. And that's usually what happens with AMC. So I know you're saying it's not me, but just as a method of defense for the stuff that I do say, I don't feel like I've always said it's next Monday. Like, sometimes these things take a lot of time. And I'm saying right now, if it doesn't go here, it's going to be delayed quite a bit. It could be talking about June. And then if it doesn't, at that point, you're in a different scenario, It's like there's no point in continuing on the same path. I let it go if it needs to be let go. Like, I let go of the idea that it's going to come back up here. As soon as it popped 265, it was over. You let it go. Really, it started to be let go right here when this failed to jump back above 276. And if you look at the Discord, and I know you're not all in the Discord group, but like, I was pretty darn straightforward about 276. It was the same thing back here when we were going up. I said, if it doesn't get over 335, like that's the key level. It just doesn't do it, and it just breaks down. And it did. It made an SOW, then it came up again, and then it broke down. It's as straightforward as it can be. And did the same thing here. It's like you have to just kind of take the chart as it is. If it drops it and then comes back up and doesn't break out, it's done. It's going to go down, And then you're like, all right, that's not the scenario you're in, and it's clearly not going to set up high. But that doesn't mean this wave is completely and totally busted and it couldn't possibly be bullish. It's possible that it's bearish all of a sudden. It's not going to be bullish, but it didn't make the same weaknesses, so it's a question. So I'm telling you right now, like, yeah, it could be this very simple, like, it's next Monday if it doesn't go today or tomorrow. We don't know what the day is going to hold. Tomorrow we could be up 20, 30%, and all this complaining would be a bunch of waste of oxygen, you know, that these trees are working hard to make. It's like, we don't know what we don't know. But we're thinking about these things critically so that you can make decisions on trading. And if you see certain things happen, you'll be aware that, all right, we're not in this situation, we're in this situation. That's not bad trading. I don't understand why that would be considered bad. So delays are delays. I'm telling you right now, this is the cross up right here. I'm pretty sure. And this is the backup, but there's two cross ups, so it's confusing because there's like a high and a low. And this is why I said it could be very much just simple, like next Monday. That looks right to me. But there's another one right here, and that one is tied into that change of character that happened too around earnings. So this crosses, pumps, backs up to the creek, jumps another creek that was a higher one, backs up to the creek, and then goes. It's like, well, which one is it, Booksy? I don't know. They're both being used. Look at it visually. Like, they're both being respected. It would make perfect sense for me if we backed up right now to the first one and then jumped over the second one and then just ran. But we may need to jump over the second and back up to that one. Well, when is this going to end? I don't know. That's what I'm trying to say. Like, you can... I could be right about parts of this and then be wrong about other parts. This may take till June 6th. Somebody said that before, and I was like, I don't know where that comes from, but maybe it needs to jump both of these in succession. So probably the right thing to do would just be to not buy stuff that you think is going to be destroyed in the matter of a day, you know. Shares are good. Longer options are good. Everything else is pretty dangerous, you know. You're really trying to catch a move. So I didn't feel like anyone was being, I didn't take anything as condescending. I just looked at it as he had a question about timing, and I think timing is tricky. It's one of the hardest things. I mean, Wyckoff traders don't even do it. That's how tricky it is. They don't bother with timing. They just wait and react when it happens. To some degree, Elliott wave traders do the same thing. They wait for the breakouts. They don't necessarily consider timing at all in their waves. Options traders like timing because they use certain markers in the option market with timing. I use a little bit of timing when it comes to things like triangulations and pivot points, and that's about as far as I'll take it. This is a triangulation. It could be a pivot point, right? I mean, if you want to follow like the best traders in the world, that's going to give you a little bit of an edge. Like, that's fine. But at the end of the day, like, everybody's going to get it wrong sometimes. And it's up to you to decide how you want to trade things. So you can't look at this and say, well, he says it's then, so therefore it has to be then. Well, that's silly. That would be silly. It'd be great if I called it out on the day of, but it doesn't always happen that way. And back here, I didn't really call it out on the day of. I mean, I did because I saw the motion finishing. But like when we first rebounded, I think I just drew it really crappy. Like, there's a random Discord post about it. I think I just did like this or something. Like, I don't even know. Like, I just did something like that. I didn't have timing. I just kind of said, oh, I think it's going to bounce there and go. And it may have even been faster than that, because I think we were looking at it like this kind of strong reaction. And I just wasn't thinking about how it might pan out. I didn't buy in until right here when I was like, oh, it's going to drop and then go into a final kind of shake motion. That made sense to me when I got there. But I didn't have a sense that it had to hit on a particular day. And I actually thought this was going to take a lot longer to go up. And that was clearly wrong. So anyways, we'll see. Maybe we're going to get this pullback and it's exactly what we think, and the next Monday it's going. Maybe it takes an extra week still, and everybody's really annoyed by that point, and they're sick and tired of this. And I'm like, yeah, well, then who wins in that scenario? The operators, you know? The operators win. They like it when people get frustrated and give up. It's easy money for them. You know, I don't know. That might be very reasonable to conclude. It just sits down here in May. Maybe there's a reason in the options chain it's not running before the end of May. So maybe we don't need to worry about it, and we shouldn't be worried about trading things like right in our face. It's not a supply demand focus, a liquidity focus. Market makers can create liquidity and naked selling into the market. Well, yeah, you're right about that. Yeah, it's a way of generating kind of a temporary fake liquidity. Yeah, that's fine. I disagree that there's like no volume, but I understand what you're saying. It's very, very low, but that's fine. The idea of it being low volume makes sense to me. It usually is very low volume before it makes a move. At least like from the point of view of like hovering over it, you know, looking at the big picture. Most of our moves come after like a period of settling. Now, that being said, like there's usually like a big buy-in, which we have, you know, like a big motion, and then the balance stays pretty high for a while, but you need to see that flush out, which is what's happening here. It's trying to shake people out. And it by default, that means that the volume's probably dropping, and it is. But the idea that the volume is dropping while we're going down is actually very good. It means that the sellers are not gaining momentum. You want to see some seller pick up because you want to see that people are taking it down. They're getting out, they're dropping their shares. That's fine. They're going to knock out the weak hands. That's what I think the final action is about, is really like that big double swing motion is really for both accumulation and distribution purposes to drive the price down while also grabbing some shares here. So I'm not concerned. I'm really not. I think the volume being low makes sense, and that you would take it up in order to drive the price down because you have low volume. Something like that happened back here too. You know, the volume was getting kind of ridiculous low right in this period. This is the first big pickup in volume. It still stayed super low, but then you drive the price high and then look at the injection in volume here. You know, the sell down, the second sell down is like significantly higher volume. So it helps you punch through. This was very low volume when it got to the bottom, extremely low. And then the buyback down, when you come through it again, look how high the volume is this time compared to where it was. It's super high. Easily like quadruple or more the volume on that next push down. Why? Because look at what you did the on balance volume. It's like highly elevated. More liquidity, right? So I'm with you guys on a lot of those same points. I don't disagree. I think on the big picture, this is one of the highest volume areas we've ever seen on AMC. But on the smaller picture, yeah, it's still kind of garbage looking. So if this takes a turn down, it's going to do this probably at least a week. If it doesn't, it would be very odd, but we'd probably expect it today and tomorrow even. I mean, it seems like it'd be that soon, which is kind of crazy to me. Like, it's super soon. I wouldn't put a bunch of money on that personally, but yeah, I mean, it could be as soon as today or tomorrow. I wouldn't be surprised if we start seeing this kind of finish and like round off, and that the people that are taking profits here then do a buy-in or something on AMC. Like that secondary action seems to matter. So yeah, I mean, I generally agree. This shouldn't be dropping super low again. I think it could go to like 26.5. I had this on the chart last week. There's some levels here that I would rather hold. This blue line right here is like the ice, or one of them. I think this one is very important to hold on to. And for the S curve, it would be fairly significant, but it wouldn't surprise me either to see it drop down through it for the purpose of shaking people out. It's kind of like a liquidity trap or a bear trap where it looks really bad because it dips below. That's not 26, but it dips below and then hits the actual ice, which is this peach colored line on the screen, which is the bigger one. So it would not surprise me if it kind of lost one wave for the other and then reversed really hard. So like a type of it, it's not really an SOS, but it's more like an LPS since it didn't push higher here. So again, either today, tomorrow, it makes a move and just SOSs and goes, or it backs up. It could do a little bit of both, but it wouldn't be like significantly different, right? It backs up and it waits till Monday the 19th. It seems like the same thing that we're talking about with AMC. It really does. You could have an up thrust here on GME that drops, but right now it's like, sure, that makes sense. I hate that it's that much time, but this is like a really big deal, especially for something like GME. If we think that this ends up not coming back down again and that it stays elevated, this could be a very big deal for GME. That's not the only scenario, but it would be like the last time it's at these levels, you know, for quite a while, potentially. So, I mean, it's a huge deal. Yeah, I'll stream tomorrow. Speaking of which, I'm going to go ahead and head out. I didn't cover everything under the sun, but I did do a lot of the bigger stocks first thing on the stream. If you want to go back and check them out. I still think that SPY is finishing its S-curve and it's about to be done. I think at this point it's ready for a downturn. This is a really, really, really fancy pants call out, and it worked very, very, very well. I don't think that I would go any further than this personally, but you never know. You know, this looks really solid to me. Like it hit the 580s mark. Maybe it didn't get quite there. I don't really care. Maybe it will this afternoon. Again, doesn't really matter. To me, I think it's there. I think the rest of it's sort of self-explanatory. You should have a pullback here. This is like the middle of a wave. So it could be a 1, 2, 3, 4, and then 5. But again, how does it get to 5, you know? Probably comes back down pretty low before going up again. So it's like there's some time built into this. I wouldn't guarantee it just keeps running. That's me. You think it keeps running? That's great. Maybe it goes to 600. I don't know. The trade is over as far as I'm concerned for now, because it went back to the March 4th targets, and that's kind of where I leave it for now until it finds a support again. And I do think it's likely got to come back and find this support. It didn't even check in on the way out. It just gapped up. So I don't see why you wouldn't come back to that, but that's me. And then when we come back tomorrow, if if something crazy happens today, I'll come back. But if not, I think I'm just going to leave it at that. For AMC, it really is like a today and tomorrow. If it doesn't happen today and tomorrow, I'd just be looking at this kind of setup where to see if it kind of holds zone, and maybe midweek it tries again and then it fails and it ends up low. That's a probable opportunity to buy in my opinion. You're risky, but it's there. It's not that far away from a breakout, but what has to happen is it would have to kind of hold here and then jump back above 285, and you would see volume. Like, it would not be like a weak push. It would push up and there'd be a huge amount of volume right here. So that's not complicated to me. If you see it, it's going to be pretty obvious. And if it doesn't happen, then my expectation is kind of chopping back towards the 260s mark and a week. And then probably next week, big moves. Okay. Worst case, I suppose, if you want to say that, I still think it's not that bad. It's just coming down to like 240s area. I really think that that's kind of the worst case here, and it's not that bad. I don't think it's going to slide all the way to like 188 all of a sudden. I still don't think that. If it goes down here, I'm pretty sure it's going to like rocket at one more time. And I don't think AMC is likely going to go beyond 485. That's kind of the upper echelon. I really think 412 seems very likely, and that's about it. We'll see what happens. GME, same thing. I don't think it's going to rocket all the way all at once. I think it's likely to come up towards 32 to 35 and then maybe resets after that. So yes, I still think it's going to go below 2s after a run up here. But I do not think it's going to go straight down, I think we're hovering so that we can make a final pump, and then we're going to slide as low as we can go. That's my thought on it. The only situation at all that I could see someone arguing for is that right now you're going to go in for a spring. You're going to dump super low right now, and then you're going to take off in like the end of May, and it's going to be over. But I personally don't see it happening without that first push up and drop, because the spring to me needs to have that big volume buy-in and then sell off. And I don't see it. If somebody else sees that, that's great. You should always consider other people's TA. If someone else is saying, oh, I think it's going to drop and here's why, well, consider it. Maybe they have a really good point. Maybe they're thinking about it a little differently than I am. And that's fine. I don't think about it that way. I think it's a backup here, shallow backup if anything, run up to near 4s, this area, this pocket, and then drop back down far over the next 2 months, potentially into August. That's my thought. If I'm wrong, I'm wrong. Yeah, either of these is possible. I mean, we've got one that seems to be 485, but the other, to me, at like 4 is fine. I think that's high enough. It's just a question of that upthrust. And maybe it happens in extended hours and doesn't happen in regular trading hours. Who knows? Still, this to me looks correct. It's missing that pump, and then it should dump one more time. But this time it'll be like a massive on balance hike and a massive on balance flush. To August 25th? Why? I don't want to. Sure. I mean, this would just be a way of looking at it from a different perspective. But what this is right here is like a double flush. So this is like a flush down and then a flush back up. So I don't see this as like disconnected. This would be like a flush like this. Like an entry exit. So you'd have to do a flush down through the S curve, so to speak. Like here. But I'm measuring we're measuring two different things. Yeah, that's fine. That would be a hit on like 260. I think the point is that that would be what I would call like the slingshot. So if you take that and then you drive it through like a 50% through here, it's going to take you to like 185. That's not inconsistent with what we said before. And then if you do it again, going up to the upside and you double it up, it's going to take you up to like that 12s area. Like double up from the top right there. It's going to take you to like $12, $13. I don't know what you're saying. I'm saying that this is going to flush to the upside and then flush through this curve and come down. You think we're just going to stay flat here and then drop? I mean, if the ultimate goal were to like heavily distribute, then maybe. It's not impossible. But I feel like we've already done a lot of that, so we'll see. I don't know. I still believe in the 2-year cycle. I think August 24th is going to be the return. It would make more sense for me that they would do this because you've had this disconnect right here. You haven't gone back to 4. It'd make more sense to me to have that pump and then really dump it down and spend more time trading down bottom than it is to trade this again. It doesn't really make a lot of sense to me, but it's a question of desired liquidity. I think you spend more time down bottom if you do the double flush here. Potentially. But I also think that part of this is not meant to be downside. Like the time built in to August 24th should be some upside. There's no room for any kind of upside there unless you think it just goes straight up and keeps going. So, but it's a good thought. I like this curve. All I'm saying is I just disagree that it's not moving already. I still think August 6th is kind of the latest it goes because I think it's going to get back here by September, like right there. So I can't see how you go that whole distance. It'd take at least like 20 days to work it out. In my opinion. I'm also using the initial drop in, this guy, as like a probable, move guide. So, I mean, if you take into consideration any time spent up top plus the time spent down bottom, it'd really be more likely that it's in July. Well, that's how you get liquid. You cover your short positions and you get people to FOMO thinking it's about to take off like last year. But it only goes up a portion of the way. And then people are buying in like crazy right here because it's moved, 80% or something overnight. And everybody thinks it's squeezing. Then you drive the price backwards because you're selling already. We did the same thing back here to some degree. It broke out and forged a breakout and then just took off on balance goes way, way up. You do the same thing right here, but to the nth degree. And this widening matches the widening that we see on the price action. It's the same widening. Everything kind of adds up. That looks just like 2020. I don't think that's going to get anybody excited. I disagree. I don't think that's what you want to do. We're just going to disagree about it. Like, I know what you're saying. I like the S-curve idea. I don't think that's the S-curve I would use. I think that's like an S-curve that's the bigger, broader move, and it's probably correct, but it's not the flush. It's missing the flush. In fact, I would even look at it and suggest to you that this flush right here is a model for like the kind of flush that we're talking about, and this flush right here. These are both like, both of these really are pushes that are kind of yin-yang around that marker. And see how this is used to like drive the price lower after those creek crosses. So we've got like multiple instances of that push up followed by a big dump where it's bringing in volume. I can't see it being that slow. I just can't. Like, now is an ideal time to make that pump and then drive the price down low for that spring motion. It makes the most sense to me. The only other alternative is that it's a weak pump here and then it just drops down, in which case this goes really low. But I just don't see that happening either. If you want liquidity to go down, you just got to take it up. I agree. We don't have to agree about it. We'll see what happens. I think we're going to see it move. And from an iteration standpoint, my bigger, I guess, argument about that is this iteration happening again. We need to see that kind of pump. It looks very mild right here, the way I did it, but it would be like really ugly. You get like an up thrust and it would probably come almost immediately back down to this bottom here. And then you basically could drop the price pretty low. And I don't know exactly when this all happens and shakes out, but... And this sort of depends on your outlook on like where these things occur. But to me, like that or August would make sense. I think it's time to kind of snap it out of its complacency. All right, I'm done. I gotta go. I hope you guys have a great afternoon, and I will talk to you later.